announcements. And then we'll start the meeting. I'll turn it over to Thomas, and then we'll start the live stream as well. Firstly, again, good to see everyone, some of you in person again. And as a reminder, since we haven't been here for over 2 years, if you're in person, you'd like to make a comment, we just turn our name tags on side, and that's how Thomas knows that you would like to make a comment. For those of you online, I'm sure you're very familiar. Please just raise your hand through Zoom, and we'll be monitoring to make sure that your comments get in as well. Since this is our first CAG meeting in a hybrid style, we'll be working through how to make sure that we get all the comments, so bear with us. But I just wanted to make sure that we are listening to you, and we'll make sure that we will get to you. So with that, I'll turn it over to Thomas, and you can kick us off for the day.
Yeah, thank you, Dave, for the pre-meeting announcements. Welcome, everybody. And as Dave said, it's great at least to see part of you physically again. So thank you to everybody taking the effort of traveling who is here. And thanks to all others sitting on the screen for bearing with us, sitting in front of the screen for the next hours. Actually, we have a fully packed agenda, and it might look like being only half a day, but actually we squeezed in the content of 1 day, and you will see it will be very intensive and very dense. So bear with us, and thank you for all your great contributions already in advance, which I know you might provide to us. First of all, I want to welcome a new member, Mr. Anthony Close. At least it's the first official meeting he's attending. Anthony joins us from the Parliamentary Budget Office of Victoria in Australia. His perspective, obviously, as we always said, we really appreciate and welcome the parliamentarian perspective is one we are really excited to add to the CAG. So great, Anthony, to have you with us, and welcome to your first CAG meeting. I hope this will kind of be a good memory for you going forward. Second, I would ask Ross to explain to us what actually is for a special day today. You kind of all probably realized today is a public holiday. It's the second time it is celebrated, and Ross, perhaps you can add a little bit more detail.
Yeah, so today is what's called Juneteenth here in the US, and it's a public holiday to recognize the abolishment of slavery. And we weren't aware of this when we planned the meeting here in person. Planning it from Canada, it's not a holiday. So we just wanted to give a special thank you to the IPSASB staff who've come in today on their holiday to support the meeting, because it is a public holiday and they normally wouldn't have to be here. And you might notice when those who are here in New York, when you're out today, that there'll be some places might be closed and some activities might be ongoing. So I just want everyone to be aware of this holiday and to note it, and again, to apologize to the staff who've had to come in today on their holiday to support our meeting, but to also thank them, because it is an important meeting for us, and we really appreciate them coming in on this special holiday. Thank you.
Thank you, Dave, for this detail. I don't know whether that is the reason for the crazy traffic which you face outside. I don't know how many hours I needed yesterday to come from the airport to the city. It was a disaster, but yeah. Anyway, all right. So with that, let's move on. You see, I already said we have a fully packed agenda. As a first agenda item, we will have a presentation of the European Union regarding the implementation of IPSASB 41, and Rosa kindly agreed to give us a presentation. Then we will have, as always, the IPSASB program and technical directors report on the work program, and the report back, which will be provided by Ross. We will have a short coffee break then, and I can already announce that David, in his famous form and style, will look after us with his bell. So watch out and listen to the bell, please. After the coffee break, we will talk about measurement, public sector measurement basis in detail, and look what we can kind of provide to the CAG in terms of the public sector measurement basis. Then we will talk about advancing public sector sustainability reporting. You have seen the consultation paper and the publications in May in regard of that, and we will go through the consultation paper and provide input to that. After the second coffee break, then we will have a private session where we kind of talk about a couple of issues, administrative issues going forward. So any remarks regarding the agenda? Fine for everybody? That's good. Very good. So we can kind of approve the agenda. Move on and let's see the review and the CAG minutes from December 2021. Any comments regarding the minutes? I don't see anything. I don't see anything on the screen as well. It will be a challenge, I have to admit, to have always the screen inside as well. So bear with me if I overlook somebody on the screen. Please don't get angry with me. I try my best, but Ross will help me watching. So, but I don't see anything. Okay, so we can kind of take the December minutes as approved as well. Right, that leads us into the IPSASB development since last CAG meeting. Who's going to take the lead? Ross, please lead us into that.
The main point we wanted to highlight in the development since last meeting, most CAG members will be aware of, and I'll talk about it more in my program and technical director's report, but it's the suite of ongoing consultations that were published in May. So that's the sustainability consultation paper that the CAG had a special session on, and the natural resources consultation paper that the CAG discussed several times over the last couple of years as we developed that. And just flagging those developments, and we'll talk a little bit more in the program technical director's report, that if those are of interest in your jurisdiction, to please make sure that you make your constituents aware that these consultations are ongoing. The consultation end date for the sustainability CP is September 9th, and the natural resources CP runs until mid-October. And it is important that we get broad and strong feedback from around the world on both these consultations, because they will inform the next stages of these initiatives. So with that, that's the main update.
That's fantastic. That already gains us more than 20 minutes on the agenda. So if we finish like that, we will not need a coffee break anymore. Right, but I'm very confident, Rosa, that your topic is occupying us much more than the first agenda item. So with that, I invite you, Rosa, to kind of lead us into the presentation, into the issues. I think the plan is that you kind of present in pieces, and kind of during the presentation, we will have the opportunity to ask questions, and you ask for comments. So with that, Rosa, please.
Okay, thank you, Thomas. Hello, everybody. The objective today is to share with you our experience to implement IPSAS 41 in the European Union. I think it's important because it's not easy. It's this implementation and this standard, it's a difficult one. And I think to share our experience, if I can help others, or we can share the experience from other jurisdictions, could be interesting. Maybe before starting, because now we are very far from Europe, maybe to remember what is the European Union. The European Union is a political an economic union of 27 member states that is composed of several institutions. We have the European Parliament, the Council, the European Commission. I am working in the European Commission. That is really the executive institution of the European Union. We are sharing in the European Union priorities, policies. We have now the big priorities. This is the green transition, the digital transition, an economy for everybody, to recover from the COVID crisis, to help Ukraine, and all of that is done at the level of the 27 member states. One of the tools that is very important to implement all these priorities, policy priorities, is the European Union budget that is implemented at 95% by the European Commission. This budget is around 170 billion by year. But after the COVID crisis, the European Union has adopted a new instrument. Maybe you have heard, is the New Generation EU, with 800 billions to be implemented in 6 years. That means that our annual budget will be duplicated for 6 or 7 years. I will go to the next slide. It's a little bit the presentation of our balance sheet. It's a balance sheet of 2020 because the financial statements of 21 is now in the process to be adopted and will be published at the end of this week. And it's not possible to publish before that they're adopted by the institution. Of this slide, you can see that our balance sheet is a little bit particular. We have a huge percentage of financial assets, of post-employment benefits, but the impact of financial assets on 21 and the following years will be much higher following this new Next Generation EU that was adopted in 2020 to help the European economy to recover and to become much more resilient for the future. The Commission has also proposed a plan for the reconstruction of Ukraine that, if it will be adopted, also the financial instruments will increase again in the future. And you see also that we have a balance sheet very particular because the net assets, the net liabilities are much higher than the net assets. And this difference is represent the amount that the 27 member states has to contribute to the future. It's not that we are in bankruptcy, it's really the demonstration that the 27 member states has to give the contributions of each year to the annual budget of the European Union. Inside the asset part, you can see that financial instruments, we have different financial instruments. And the most important ones is the loans that we are giving to the member states, but not only, also to third countries. It's for this reason that the implementation of IPSAS 41 was very important for us. What are our different types of financial instruments? To implement the program of the European Union, we use a lot the financial instruments. Some years ago, the European Union was given mainly grants, only grants, but we started with financial instruments some years ago, and this use of financial instrument is increasing. We are given loans to, as I said, to the member states, to sovereigns, member states and third countries. All these loans are financed by borrowings and with a back-to-back framework. And all these loans that we are giving are guaranteed by the European Union budget. That means that if the loans is not reimbursed by the country has received the loan, the European Union budget has to intervene to reimburse the borrowing. We have a lot of guarantees. We are giving guarantees not only for these loans, but also to financial institutions, and as the European Investment Bank and others. We are investing in venture capital and in companies. And we have also an activity of asset management, because if there are calls for all these guarantees, we keep aside some funds, and we are investing the funds that is like a provision of the budget that we are taking. How these financial instruments are implemented? One part is implemented directly by us, mainly everything related to borrowings and loans and lending. And also that are implemented by others, what we call indirectly managed through agreements with a specialized financial institution as the European Investment Bank or development agencies. And what is the objective? They are more specialized than us. And then we have signing guarantees agreements or delegation agreements. In this case, they have to report annually to us on all the implementation of financial instruments on behalf of the European Commission. The project of IPSAS 41, as you can imagine, it was important for us. The implementation of IPSAS 41 is foreseen for 1st January 23, but we decided to go early on the financial statements of 2020, and that was permitted by the standard. And why? Is because our budget that I explained is a budget of 7 years. Each 7 years, we have a new renovated budget. And the budget of this period started in 21. And more is this next generation new instrument that also the implementation started in 2021. And we wanted that from the first year, we had all the financial instruments that increased a lot based on the same standard. It's for this reason that after discussing internally, we decided to go for an early implementation. We are full IPSAS compliance. It's true that we have our internal accounting rules, but are full on IPSAS. And why we have this translation of IPSAS to our activity is because there are some IPSAS that are not applicable to us because we don't have the activity. And because in the IPSAS there are several options and we prefer not to have options and we choose one of the options. We have an advisory group to discuss our standards, and before to be adopted, it's me who adopts finally the accounting standards. We have these discussions with the advisory group to be sure that we are in line with the IPSAS, and we are audited by the external auditors, that is the European Court of Auditors. How we apply this IPSAS 41, it was possible not to do to change the figures, to do a restatement of the open figures, but we recalculate all the comparative figures and we include all this information in the disclosures of the financial statements. And that it was also a possibility that was offered by the standard, and I think that was a very good choice that we did for the implementation of this IPSAS 41. I think it's interesting also to share with you the process that we did internally. It's important to have a good team. And I have to recognize that I have a very good team, and the master of this implementation inside the European Union is on the screen, is Magdalena Zojala, who was the team leader of this group for the implementation of the IPSAS 41. I can say that we did 3 steps. The first one is to analyze very well the rule, the standard, to see how to transpose this standard to our internal rules, to discuss with the advisory committee, to choose always the first choice for us. And that is one of the aspects. Then to analyze the impact, the really impact on our business, and to prepare a roadmap and to do a very close monitoring of this roadmap. The second step is to really collaborate with the risk management team. And that is really very important. The risk management team inside the European Commission, we didn't have that some years ago, but from 2019, we are creating and developing this risk management that is very important. And the team of accounting and the team of risk work very well together. As I said, we implement a lot the financial instruments with implementing partners, other financial institutions, and we work a lot with them. We explain the rules because it was for them to send all the information to be prepared based on the IPSAS. Finally, at the beginning was very complicated because some of the financial institutions didn't want to do all this reporting. But at the end, they understood that there was not so many difference between the FRS and the IPSAS, because at the beginning they would say, we are not public sector, we want to prepare everything under IFRS and not under IPSAS. And that was a discussion, and we explained, and we work a lot with them. And finally, we succeeded, but it takes a lot of time. And we inform during all the process to our external auditors, the European Court of Auditors. Each time that it was a new step, we discuss with them to avoid problems at the end of the process. Internally, also, we had a lot of discussions because maybe it was one of the first times that the budgetary people saw the implication of the new implementation of the financial instrument, implementation on the budget. As I said, we are IPSAS compliant for the financial accounting, but our budget is more or less in CAG accounting. And that is the difference. We have this model that is complicated, but more and more, I think the advantages to have accrual accounting, it's analyzed by the budgetary people and also by the risk team, and to see the consequences. And that was also an important step. And our advisory group on accounting experts, it was also the discussions in this group were very, very interesting and help us also in all this process. I think that here it's maybe to cut a little bit and to animate the discussions. And it was a question to the members if you have if you want to have some clarifications. It's true that until now it's a little bit the framework. I will explain the next step, but I don't know if you have some questions at this moment.
Thank you, Rosa, for the introduction. Any questions? Karen, you have one.
Just a very quick question. If I understood what you said, Rosa, in implementing this, you chose one option under the standard to progress. Is that right? You wanted to filter down to one option that you wanted people to follow. I just wanted to check whether I'd understood that correctly, and which option and why.
I will explain in the next slides.
You will explain in the next 2 hours.
Yeah, no. I will explain. No, I wanted to say sometimes in the IPSAS standard, it's possible several options are allowed. And for us, we prefer not to have different options. We would like for each problem to have one solution instead of a different kind of solution. It's for this reason I said we prefer to translate the IPSAS to our rules, because we are consolidating with all the institutions and the agencies, and we prefer that it's not these differences of implementing the standards. But for IPSAS 41, I will explain when we did an option.
Thanks, Rosa. Jean?
Yes, thank you. It seems that a lot of work here, Rosa. So you have to consolidate 27 states, right? Who is responsible to make that consolidation? So is it the final statement, is it audited? If any, audited, by whom? You mentioned that you make some kind of combination. For accounting, you use fully accrual, and for the budget, you're using cash basis. how do you manage it? Thank you.
Sure, you will answer to that, but probably we need to be careful not to mix the level of the European Union and their financial statements and the member states' financial statements. So we are not talking about the consolidation of the whole EU. We are talking about the budget and the financial statements of the EU as the institution. But Rosa, you can explain that.
Yes, I wanted to precise what Thomas explained. We are consolidating what I said at the beginning. We have the annual budget for the European Union, but that is the annual budget that is managed by this supranational entity that's the European Union, but is not the consolidation of the budget of the particular 27 member states. That is one thing. We consolidate all the things that are done at this supranational level with all the 10 institutions and around 50 agencies. And that is done by my team. I am the accounting officer of the most important institution, and we are consolidating. And it's audited, all these consolidated financial statements are audited by the European Court of Auditors, that is one of the institutions. And each year, the Court of Auditors is giving an opinion that until now was a clean opinion, and we want to continue. We have a clean opinion without reservations, and that the opinion of the court will be given after the summer on the 2021 financial statements. And how we manage the budget in cash, and sometimes it's difficult. In our annual accounts, we explain that. We explain the difference. We do the reconciliation between between the budgetary result and the economic result, and more or less, it's. I think it's well explained in the disclosures of the financial statements.
Thanks, Rosa. We have two questions on the screen. First, Kevin, then Sheila, please.
Good morning. Thank you, Rosa, for the presentation, for the great background as well. It's very helpful. Just wondering, Rosa, when you decided to advance the implementation date, and did you fundamentally change like the planning execution process? How did that work?
Could you repeat if we changed there?
Yeah, so when the EU decided to move up the implementation date by a few years, did you adjust the planning execution process to kind of achieve these sort of tighter timelines?
Okay, we take the other and then we answer.
Whatever you prefer, you can answer.
Yeah, I can take and then.
Okay, then Sheila, please, your question.
Yes, thank you. And thank you for the presentation. I just wanted to know if you feel that the implementation of this standard makes it more likely that the the budget people will use these numbers more, or the decisions makers will use the accrual numbers more, or less likely that they'll use the more accrual numbers more in their planning stages.
Thanks, Sheila, for the question. Just one remark, Sheila, if you intend to appear on the screen, you do not. So we see your background, but we don't see you. Just to indicate that.
Thank you. There we go. That should fix that.
Now.
That's much better. This is, yeah, perfect. Thank you.
Yes. Internally, I will start with the last question of Sheila. Internally, yes. As I think the budgeting people use much more. We had a lot of meetings with the budgetary responsibles. And why? It's because the budget is giving guarantees for a lot of things, no? For these loans and borrowings, for the implementation of financial instruments via the financial institution. That means that the European Union budget is taking liabilities for the future. And now with the sustainability of the budget, the financial sustainability, it was really necessary to understand what could be for the future the implications on the budget. And maybe I could say that the accounting information that we have produced for the 2021 financial statement was very useful, and we discussed a lot. And I will give an example in some slides. For example, what we did with the loans to Ukraine. That was something that we discussed a lot internally, but it was not the only point. And I think it's that little by little, to have this hybrid, it's not easy. And the budget people, finally, at the level of the politicians, what is important is the budget. And that for the time being, it's like that. But little by little, the budgetary people recognize that there are a lot of information in the financial accounting and in a lot of knowledge by the accounting team that could be very useful for the budgetary process. And that is something that we are putting in place little by little. And also with the risk team, as I said, it was really very useful because we pass to them all the knowledge that we had. On the process, for that, we change a lot the process, as I tried to explain in the slide. And it was Magda, as I said, it was fully working on this implementation of IPSAS. We did alone internally. We didn't use external consultants, sometimes only to verify some questions, but all the work that was done internally. And it was necessary really to change all the process of the decision making, but because the decision that we have taken for impairment, for example, was this consequence for the budget, and it was necessary to discuss with other teams that maybe in the past it was not so relevant.
Thanks, Rosa. I think I have a follow-up question on that. I think you kind of explained the importance of kind of corresponding information between what's the impact on the budget and how kind of do guarantees or future liabilities materialize, kind of provided by the risk management. But I would assume this is not only a process which is relevant for the implementation phase of IPSAS 41. So did you kind of establish an ongoing working structure to connect the three perspectives, risk management, budget, and accounting?
Yes, but this year was more clear. It was more important because it's true that international situation, it's not, it's difficult. And we are implemented, as I said, a lot of financial instruments. We have this instrument of Next Generation EU. That means that the budget is taking a lot of liabilities for the future. And I think that it's normal that the three pillars, the risk, the budget, and the accounting are working together to put all the information together and to discuss together. And that we are creating. It's the first year. In the past, was there, but not at the same level. Now it's really at the top level of the manager of the European Commission that we are discussing these things. But at the level of teams, sometimes it's difficult because the accounting team, the risk team, they know, but all the others, the implementers of the policies, they are not so convinced. No, they want to implement a policy and that's all. And when you are going to the implementer of a policy that our implemented partners needs to apply IPSAS 41, what is that? And that it's a lot of communication that we need to do internally.
Thank you, Rosa. Kevin, do you feel your question is answered? Okay, perfect. Any further questions? I don't see anything in the room. I don't see anything on the screen. So with that, Rosa.
May I please, just a very simple question. Rosa, how big was your team, internal and external? That's a very simple one.
The team was internal, and it was about 4 people led by Magda, and that was really our internal accounting team. And external was not, as I said, we implement internally. We didn't have a team of consultants working with us. That means that the accounting team was this one. Then there was the risk team and the budgetary team. But really, the implementation of the accounting team was done by 4 people. I will go to the next slide. And the first major impact of IPSAS 41 was the new classification of the financial assets. This classification now is more principle-based and depends on the contractual cash flows of the instruments and its management model. I would like to say that, for example, the equity investments have been reclassified from available for sale financial assets to financial assets at fair value through surplus or deficit. That was one of the first impact. Concerning the debt security, we analyze also these debt securities. And finally, also there was another reclassification of these debt securities to financial assets at fair value through surplus or deficit. That was another reclassification. At the level of the loans, it was analyzed, and finally it was decided that it was not necessary to do a reclassification of the loans. This part at the beginning was not so easy, but at the end, it was not the most difficult part that we had in the implementation of the IPSAS 41. The second, no, it's here. The second biggest impact was due to the new impairment model introduced by the IPSAS 41. I would like to say that in the opposition to the old impairment model that was based on incurred losses, the new model is forward-looking and requires impairment for the potential future losses through an expected credit loss model. And that is the key question and the part that was totally different and more difficult to implement. The European Union has implemented this model, the expected credit loss model, for its loans. And this led to recognition of additional impairment allowances for loans for which the default was not probable, but it was necessary to implement this one. For the receivable, we have implemented based on a provision matrix. That is something that is allowed by the IPSAS. This matrix is based on all the experience and the knowledge that we have internally and the statisticals that of the previous year. And that is an advantage that we had on the implementation for the receivables. And finally, for the cash and cash equivalents, it was not an impairment because even if we have sometimes during the years a big amount of cash and cash equivalents, we have a methodology that we can keep all this cash in the national central banks or in the commercial banks at triple rate. That means that it was not material to do an impairment of cash and cash and equivalent. Maybe an example for this impairment for loans to the sovereigns. As I said, the European Union provides loans not only to the member state, but also to third countries in financial difficulties under the macrofinancial assistance program. And you see that is a political program to help some third countries, and one of the instruments to help on the finance of these third countries is providing loans. These loans, as I said, are always back to back with the borrowings that we are implementing in the financial markets. All these loans are guaranteed for by the budget, and we have putting money aside in case that there are calls. That means in case that the beneficiary of the loan will not reimburse at the moment of the maturities, and in this case to avoid problems with the reimbursement of the borrowing. Until 2020, never we had impairments because we didn't have defaults. But with the implementation of the IPSAS 41, we have analyzed all these loans, and we have for the first time implemented an impairment with the loans, taking into account all the most recent information, for example, from the credit ratings, from external rating agencies, from the information that was available internally in the European Commission. We have also a preferred creditor status. The European Union has that, and in our analysis of the impairment, this preferred status was also taken into account. And for example, one of the cases was the loans to Ukraine. At the end of the 2021 year, the war didn't have started. At the moment of the year end, we had an exposure to Ukraine about 4.5 billion euros on loans. The war started in February, and we treated these loans to Ukraine as a non-adjusting post-balance sheet event according to IPSAS 14. And we disclosed that in the disclosures of the annual accounts. At the same time, we started to calculate this impairment, taking into account that it was not a non-adjusting post-balance sheet event, and we identified the amount that we wanted to impair for the financial statements of 21. But we know now that the situation at the end of this year will be totally different. Well, we don't know how the evolution of Ukraine, the war in Ukraine will evolve. We hope that will be finalized soon, but we don't know. And we don't know what will be the consequences. That means that we have a start already now working, as I said, the three pillars: the budget people, the risk people, and us all together to start preparing what will be the situation at the year end, and what will be also the implication for the EU budget. And I think that was a real added value, because when the budgetary people start thinking, okay, what will be the impact of all of that, of all this problem of Ukraine, but we don't have now only Ukraine, we have also loans to other countries with very political difficulties. Really, in the only team that we had a lot of information was the accounting team. And that was very well appreciated internally inside the institution, because we have had already done all this work. But that more and more, I think all this analysis of the impairments will be more important, because there will be also a consequence on the budget. Here it's maybe to continue to have a short discussion, and discussing with the staff members, we said that maybe it will be good if some staff CAG members have similar experiences with loans to sovereign states or to other entities, other countries that are similar of the situation that we have.
Thanks, Rosa. Perhaps we firstly ask whether there are any clarification questions. I already see Catherine on the screen. you might have a follow-up question regarding the presentation of Rosa.
Well, actually, Thomas, I was actually going to answer that last question about other experiences, but so I'm happy to see if anybody's got any questions first.
Doesn't seem to be the case, so move on, Catherine.
The experience I have, and it resonates very much with what you've been saying, Rosa, around this, is as I was on the External Audit Committee of the IMF for 3 years, and during that time, IFRS 9 was being applied for the first time. And obviously, there are similarities to some extent between the institutions in terms of the types of loan and also the protection facilities that are in place in relation to protecting the position of the lender. But there are obviously substantial differences. And I do think that some of those institutions that are lending to sovereign states have got some really interesting learning lessons across the piece between each other in terms of what's the same and what's different. Because the IMF has, I think, the ultimate first protection in terms of creditor protection, but they also have other backstop mechanisms around members being, bailing in basically if there are fundamental problems. But your experience in terms of how you went about it and the results resonated very strongly with that work. So I'd suggest there are probably some useful parallels in terms of the experience.
Thanks, Catherine. Further remarks, further questions? Kevin.
Thank you, Thomas. So I have some experience. It's not recent experience, but I had, as part of my public service career, I worked in our Department of Finance, which is separate from our Treasury. And so there was an interplay of discussions that would take place at official levels between fiscal policy people, those people that put together the budget, those projections, revenues and spending, around provisions for loans, and then around impairment issues. And then there would be a conversation with colleagues in Treasury, and our Controller General's office would be responsible for presenting the books to Parliament, to the Auditor General. So, and then the Auditor General was involved too. So there's a lot of interplay behind those conversations around impairment, and that involved different officials that had different lenses. And I'm just wondering now, in this historic context of the war in Ukraine, whether this conversation needs to become even more open. Like, it seemed to me, like in my own experience, it was quite private, and there would be briefings at the appropriate times with cabinet ministers, the executive, but a lot of it was just amongst officials. But there's so much at stake with respect to Ukraine and just the amounts of money. So I think it's part of comment and part of question.
Thanks, Kevin. Actually, I have exactly the same question going in the same direction. You said, Rosa, you're at the moment in the approval process of the financial statements 2021. So I would assume there are a lot of discussions around the financials at the moment. Kind of how are stakeholders, how are politicians, how is kind of the Budget Control Commission, or to whomever you have to present the figures, reacting to the booking of impairments now, given that in the history there were no impairments whatsoever, and now you're kind of booking impairments. Is it easy to explain why you do have impairments now, and kind of how is this discussion going on? As Kevin said, is it kind of a wider discussion explaining kind of background information, or is it a very closed discussion?
Okay, I start with the last one. It was not easy. It's not easy at all. And it's true that the process of the approval of the financial statements or annual accounts, because we approve not only the financial statements, but also the budgetary part, the implementation of the budget, and all the both together are the annual accounts of the European Union. The process to adopt that is that I am responsible to prepare that and to present what we call the College of Commissioners, that is the government board of the European Commission. And we present, and it's true that we have had, as I said, several discussions. But we need, then it was necessary to discuss with our, what we call commissioner. The commissioner could be equivalent of a minister in a country, no? The commissioner responsible for the budget, because it's him who has to present the final annual accounts to the governing board. And that was really very, very interesting, because sometimes the accounting people, we are presenting things in a very technical way. And that is, I think, that was the main challenge, that we need to explain to a politician what was the impact, but not in IPSAS 41 or these kind of things. And that sometimes it's the difficulty to put ourselves on the place who we are in front of us, and to explain really the impact of all these decisions that I was taking on the presentation of the accounts. But it was very, very interesting. And I have to admit that all the links also with the future budget, it was very, very clear, understood. Now that it was internally of our organization, the accounts will be adopted, I think, this week. And will be published, will be sent to the two branches of the budget authority, the parliament and the council, and then there will be a presentation of the accounts after the summer. Our commissioner will be present the accounts in the parliament, and I will present in the council, and then there will be the discussions. And I don't know how this discussion will be in the future. Then it's true that we are not the only ones doing, well, the IPSAS 41 maybe, yes, but the analysis of this, what is the consequence of the launch to Ukraine and to other third countries. And we have taken some contacts at the level of the risk teams, with the World Bank, with the IMF, and with some member states. But I think the proposal of Catherine will be, now that we have finalized the first cycle, that will be very interesting to join and to have a discussion between all of us, because I think we can learn from others. And the protection that we need to do of all these loans, I think it's the same in all the jurisdictions. I think that more or less what has been said.
Yeah. Just one follow-up, and just kind of as I'm imagining kind of how discussions are running kind of between accountings and politicians. I think I agree. We have to be careful to talk in plain language. But on the other side, I think it's always important to distinguish between accounting decisions and political decisions, and not to mix up an impairment of a receivable towards Ukraine with kind of the promise of a loan forgiveness, because the fact that you're impairing the receivables doesn't mean that you don't want them back, right? But if you explain it in a really pure kind of political language, not an accounting language, I think there could be misunderstandings. I think that's always a challenge, right?
I totally agree that it's a real challenge, even if maybe they will recover all the loans in the future, and I will like it, because that will mean that the situation it's improving. But at the same time, we need to take the decisions in the worst case scenario, and that is the important part. But I think also for the external world, I think it's important that they see that we are acting now, because I said we have all these loans are financed by borrowings. That we have the measure in place that in case of problems, we can always reimburse of our borrowings, and that is very important, and that is key for us.
Thank you, Rosa. Timothy.
Thanks. It's rather an observation, but rather than a question. And I think this issue of language is an important one. I think those involved in budget. I'm a budget person, so I grew up in the budget side of the Ministry of Finance, and I think there is always a language problem. So the way I talk is different from the way those preparing financial statements talk, and is different from people dealing with debt and risk management and things. And I think part of this challenge is creating a common language, but as Thomas was hinting at, it's a disciplined language, and I think the value of what adopting IPSAS does is ensuring that there is a discipline in the information that is being presented, and a consequence of that discipline, where those, let's say people doing sustainability analysis and things, they have a discipline, but it may not sort of grounded in the formal sense of accounting. So I think this is a critical thing, because it's the consequence of, given this developing a common language, then this enables politicians to make more disciplined decisions, okay, and to discipline the decisions that politicians make, or make them aware of the consequences of the decisions that they're making. And similarly, budgets will always the motivation will always be sort of cash next year, but then that needs to be informed of the consequence of that decision in terms of the trade-offs, in terms of timing. So I think, but thinking about developing this common language, and I think we're going to discuss later the issue of sustainability reporting. There's the project going on around the presentation of financial statements. I think these things are all interrelated. So anyway, I just wanted to make that observation rather than a question. But I think this is fascinating stuff.
Thank you, Timothy, for this broader perspective. One last question, probably, Rosa, before we move on. You talked about kind of expected credit loss model, or the change to that model, as one change or one impact. The other was the reclassifications from available for sale to fair value through surplus and deficit. Any material impacts on the numbers from these reclassifications?
Yes, I don't have the figures here, but there was it was important impacts. And another one was for the financial guarantees that I will explain now. Yes, there are figures that are a little bit different, and all of that it's disclosure in the financial statements, and we explain really why the difference are there. I think that it's very important, at least the first year, to give all the information for the reader, and that it's I totally agree with the comment of the language, but even for us, for the presentation of the accounts, it's difficult to find the right language that we need to put in the accounts, because if we are very technical, nobody understands. And if we are not so technical, the auditors are not happy, because we are not really following the standards. And that is sometimes a trade-off that we need to do. And it's for this reason that to discuss with the external auditors, it's always very important. And that sometimes it's not easy. But I think my recommendation is that at least the first year, all the big impacts are very well explained, maybe very long, maybe it's necessary to be a little bit longer the first year, but that it's an important. And to try to explain, even if I know that we need to use this very technical language, but to try to be communicative for the rest of the world, because finally our accounts, it's true they are audited by the external auditors and they know very well the language, but all the rest of the world, they are not specialized people on accounting standards. And I think that if we want that our accounts are used, it needs to be understood. And that sometimes it's difficult.
That was actually the reason for my question, because I think it's already complex, but it's doable to explain regarding impairment. We are now looking more towards forward-looking information compared to backwards-looking information. I think you can always explain that. This is more conservative, this is more prudent. Every politician would buy into that. But to explain, we have a huge impact on surplus and deficit because we reclassified our instruments because they didn't meet the SPPI test. I think a politician would really have a lot of question marks in his eyes. That's much more difficult to explain, right? Yeah, it's impossible. Yeah. Right. Yeah. All right, shall we move on? Okay.
Rosa, your mic.
Excuse me. Another big impact of this implementation of the IPSAS 41 was on the financial guarantees. As I said, we are giving the budget of the European Union is giving an increased amount of budgetary guarantees. And in the past, the most of these European Union guarantees were accounted for as provisions or disclosed as contingent liabilities. The introduction of IPSAS 41 as the new impairment model applies also to these financial guarantees. With the new model, we have moved to fully fledged financial guarantees contract accounting, which require significant effort to the European Commission services. And why? And the reason is because we have numerous guarantees schemes that are very complex. Some of them are very complex, and all these schemes that, as I said, sometimes are with external partners are different from one to another sometimes, and it was necessary to analyze all these guarantees scheme. And here it was a huge impact for my team. In January 21, all non-remunerated financial guarantees has been reclassified to financial guarantee contract liabilities and measured at the lifetime expected credit losses. That was also a huge impact because our liabilities increase an important amount. Concerning the remunerated guarantees, we don't have a lot. We have much more guarantees non-remunerated. The financial guarantee contract liability was recognized at the level of the future premiums with the receivable leg of the guarantee recognized as an asset. We observed, as I said, an important and a very significant increase of the liabilities for the most of the guarantees, and I think that it was a real advantage of this application of the IPSAS 41. But I consider that the information that we are given now in the financial statements are much more accurate than what we were given in the past. Now there is also, well, we have an external lending mandate, but I think it's very complicated to explain internally. Here, I pass to the next question. If you have similar experiences with the financial guarantees, I don't know if other jurisdictions who are giving guarantees. I suppose yes, but that will be also interesting to know from others what is the situation.
Thank you, Rosa. Immediate responses, reactions?
I suppose we are not unique in the world.
I thought that when you said, yeah, Catherine, in a moment. I thought that when you said we are very special because we have a negative net equity, I thought, I think you're not very special in that. That's more the common situation, I think, looking in the public sector. Okay, Catherine, and then Gustavo.
Yes, I agree with that comment, Thomas, definitely. I mean, yes, I think there's been a raft of financial guarantees given, not least as a result of the COVID pandemic over the last few years by sovereign governments. And those were, like the UK, where IFRS is being applied, which is obviously very, very close to IPSASB standards, but IFRS 9's happened a bit earlier to some extent. then there are some interesting examples of the types of financial guarantees that the governments are giving. Again, there's a delay in publication for various reasons, some again arising from the pandemic, but there's some interesting ones there. And then there's also, I think, going to be an interesting interaction with IFRS 17 on insurance contracts and what the boundary is between financial guarantees and forms of insurance, which I think we're going to have to deal with as well. So there should be some examples coming through from those types of experiences, let alone normal day-to-day things that the government guarantees.
Thank you, Catherine. And in that context, I'm looking in the direction of Ian. I think we had a very good presentation at the OECD meeting from the UK, how they're handling all the areas of contingent liabilities / guarantees, kind of the process of kind of stock taking, of monitoring, of evaluating it. If you kind of want, you can say a few words regarding that, because I thought that was very interesting.
Thank you to the staff for sorting me out on the mic front. Yeah, I mean, I think, in a way, it goes to, I think, what's behind this whole discussion is that actually when you get better information, then that actually facilitates putting in stronger financial controls. And that's exactly what the UK has done in terms of really starting to evaluate what the impact of guarantees given is and force people to actually work out, well, why are we giving this guarantee? What is it for? What is the nature? And therefore, what is the cost and who should bear that cost? And I think it's those kinds of questions, so it's a much more educated and clear approach to that this better information enables. And I think, I was going to ask the question earlier and then I thought, no, I won't elongate it, because I think, one of the challenges that the UK had was that it implemented accrual accounting, then that acted as the basis for the implementation of accrual budgeting. And then there had to be a further reform to actually bring the various different frameworks together, precisely because of the sort of interpretation problems that you were talking about. And I think, in a sense, actually, that's actually what you need to think about, because it goes to Tim's sort of point then about speaking different languages. And actually, if you speak different languages and you have different totals, then there's a question as to what are you being held accountable for. So I think all of this actually is actually seeing this better information then as the opportunity to strengthen the frameworks for public financial management. So it's part of that broader process.
Yeah, thanks, Ian. Yeah, indeed. Gustavo.
Yes, thank you. I wanted to share the experience of Chile. After COVID, the government did a lot of financial guarantees to medium and small businesses. And it created a separate fund, a different institution to give these guarantees. So we haven't still applied IPSAS 41. But for us, it will be also a problem for consolidation, because we have this separate created fund that gives the guarantees for the businesses. Thank you.
Okay, thank you, Gustavo. Karen.
Thank you. Just building on what Ian is saying, and there's also a lot of work going on in the UK about how to use the whole of government balance sheet. And so the Treasury in the UK are taking very seriously this accrual-based balance sheet for government. What does it mean? How can government use the information that's in it? And I think this is a really good example of the kind of information that you can develop that will inform future budget and policy making decisions. And I think we see a lot of that happening in the UK. I was going to ask a question of Rosa, because I think we've talked a lot about sort of sovereign loans and relationships. I just wondered whether the introduction of IPSAS 41 has actually sort of shone any light on other types of loans or guarantees that were more unexpected in terms of the types of arrangements that the EU has in place?
Rosa, do you want to respond?
I think from now, all the exchange of views with others that are in similar situation, it will be good. And if the Treasury of UK is well advanced, how explain or how we can, the stakeholders can use the financial statements, I think it will be very useful for us, because now we are in this phase that we need to prepare that from now to September, when all these aspects will be discussed for the first time, well, for the 2021 annual accounts. And I think that, as I said, given that the situation of financial instruments will grow enormously from this current year, 22, it's something that will be a hot topic for the next year, for the following years. It's not only for 21. No, I think it will be a point that it's important, given this decision to finance this recovery and resilience facility via borrowings that is incrementing a lot all these financial instruments. As Gustavo said, we are giving also guarantees to the investment in SMEs, but we are doing that via financial institutions, and is the financial institution our intermediaries that manage everything and send all the information to us in an annual basis to prepare the annual accounts. We are not dealing directly with the SMEs, but this financial institution has to report to us on all the disclosures that we need to prepare for the, for example, for the risk and all the information that we need to give. And it's true, as Thomas said, also in the contingent liabilities, there are a lot of information. And some of the guarantees in the past were in the contingent liabilities, and now they have been reclassified as liabilities. And all of that needs to be very well explained, because for a reader, sometimes it's difficult to find the complete picture, because the disclosures are very split. No, we have a disclosure in the asset side, we have disclosures in the liability side, we have disclosures in the risk, and then on the contingent. And to have the complete picture by instrument is something that sometimes is useful. No, for these instruments we have all this information, and we need to present everything split. And we are also discussing internally if for some elements that are really important to present a complete picture. And for 21 figures, for example, we have done in the financial statement the disclosure and analysis, we have presented something completed for Next Generation EU, for this new tool. We have each year we take a topic to present in a global way, and this year was Next Generation EU, with this big decision that the European Union decided in 2020, and I think that it's important. And other examples, it's true that we are also given loans to sovereigns inside the member states. The Next Generation EU is based on that, to give loans to the member states that they are requesting to implement the priorities of green transition and digital transition, and to do this recovery and resilience program. But for the loans given to the member states, given that we are working together and we are monitoring the implementation, we are not doing this impairment as on the third countries.
No, I think it's, Rosa, as you said, it's not only helpful to have the complete picture, I think it's definitely necessary, not only for transparent accounting and reporting backwards, but also for managing it proactively. And I think that's kind of leading into what you said, Karen, and this is what I understood, at least from the UK presentation at the OECD OECD meeting, going in the same direction as Gustavo said, that the UK implemented one unit, which is the contingent liability capacity, which is kind of implementing also not only ex post, but also ex ante controls, analyzing what would be the impact on the whole of government balance sheet in the future if we would agree and incur these guarantees and agree to financial liabilities. And this is, I think, where accounting gets useful, really, not only in looking backwards and reporting transparently, but also kind of helping making decisions
in the future.
I see Kevin has a last remark. Okay, Sheila has another remark as well, and then we move on with disclosures.
Thank you. Thank you, Thomas. I'll be quick. I just think contextually that, excuse me, we're living in an environment where, as policymakers think about build back better type of agendas, and we need to find the public sector will play a key role, particularly with respect to energy transitions, move towards net zero type economies. There's going to be a lot of use of financial guarantees, and on the other hand, there's this enormous potential for turbulence in the economy over the next few years. So I think having accounting standards that increase disclosure, more transparency, having accounting standards that highlight earlier recognition of impairment, I think is a really good in this particular context.
Agree. Kevin, thank you. Rosa agrees as well. Sheila, I'm sure you agree as well.
Yes, and I would tag on to that. I've always been concerned about the politicians who say, we really don't understand these disclosures or how all this risk is involved and all the financial implications of, these instruments or guarantees. And I always come back with well, maybe they shouldn't be making decisions to get into these type of instruments and guarantees if they really don't fully understand the financial implications of those. And these disclosures would hopefully help that.
Yeah, definitely. That's very true.
I think if we explain in a easy manner, it's very well understood because they know them. You can explain the implication for the future. And I think, as I agreed, as Kevin said, now we have the information on the forward looking, and that I think it's key in this period of turbulences. It's key. I think what we need to do is to find a way that the information that we have put in a more or less technical way to, as I said before, that we need to explain very well. And I think that it's the key for us, for the technicians of accounting and risks.
But in the end, I think, Rosa, it's as Sheila said, if somebody's complaining that you're not explaining very well what are the consequences of what they decided, I think it gets a little bit stupid, right? Because if they decide to enter into complex transactions and then they blame you that you can't easily explain what are the consequences of that decision, I think it gets a little bit weird. Yeah. Your mic, Rosa.
Schemes that they have adopted are very complicated. We suffer of this complication because the implementation of all this scheme is very complicated. And then they are suffering because our explanations are complicated. And it's a vicious circle, but we need to do our best for that. And that, if there are not other questions, I go to the next point, because that is the last impact of this implementation of IPSAS 41 is on the disclosures. A lot has been already said. We have put a lot of information in the disclosure. We have introduced the new disclosure on risk because it was necessary. And at the same time, we have reviewed all the information that were already given on the risks. And together with the risk team that we are creating inside the European Commission, we have taken this opportunity of changes to change and revise and to find a combination of the information that is clear and more relevant. And that it was also a huge exercise that has been done together, the accounting team with the risk team. And it's something that in function of the discussions that we will have this year, we will see in which areas we need to improve a little bit more on the future. But it's true that it's a lot of work, but also at the end on the disclosures, because it's in the last moment that we think, we need to introduce all this information also in the disclosures. For the main challenges of this implementation, I think I will recommend that it's important to have an expert knowledge on accounting rules and IPSAS. And I think that it's key. Fortunately, I have this team that was very knowledgeable, because even sometimes for us it's very complicated. It's important that to have also internally risk management experts, and that it's also a team that is being developed. But if some organization they don't have, I think the recommendation is to start creating this risk management function, and we have developed this very quickly. Then it's to be sure that all the information is available, that you receive or you can find the information that you need for all the impairments that you want to do, that you receive information from our intermediaries, and and I think that you need to put in place the internal organization that allows you for a perfect implementation. And then this forward-looking information, I think you need really to find in which available information is the best. The best to use, because there are a lot of information, but it's important that you concentrate in the most pertinent available information. And then it's always a judgment, and that it's sometimes you need to apply this professional judgment. And the implementation of guarantees is not easy. And the accounting treatment of financial guarantees sometimes is not intuitive and difficult to explain. And the future measurement also, it will be nice maybe to have much more guidance for the future. It's an aspect that if one day we can have recommendation, it's in the implementation of all of that on financial guarantees. And I think that could be useful for many jurisdictions, but I have heard that a lot of people has given financial guarantees. But that is the challenges, but there are also the benefits that it's good to finalize with the benefits. And I think the most important benefit is that we consider that we are given much better information. The information that we are given, it's more useful to decide, to take the political decisions. And I think also the transparency, we are giving not only better, but more information, more clear. And this forward looking, I think it's the most important of the aspects that we have implemented. And I think that it's the message that I would like to pass. It's the not to base on the past, but to base on the future is an aspect that is very well received, because sometimes on the other teams, mainly from the budgetary teams, they are saying we are looking to the future, and you are always looking to the past. And that was an argument that I received very often that your accounts are not useful because it's the past, and we are now deciding what is the budget for the next years, and that is something that now it will be these discussions between us and the budgetary people. I hope that will be much easy, and we are very happy to have this early implementation, because like that we will have consistent figures for the 7 years budget. And finally, maybe it's what it's the conclusion of what I have said. The increased relevance and usefulness of the financial statements, it's more important than all the work that we have done. That the team has suffered a lot. It was a lot of effort from their side, but I think the reward that it's important. And maybe something for the IPSAS board, if in the future further guidance with regards to the treatment of expenditures due to the non-exchange nature of those guarantees, that will be very welcome also. Here my presentation. I hope that was interesting for you. And maybe a last question to the CAG members. It's the challenge identified in applying IPSAS 41 reflect the complexity of the transaction that exists in this space. Do you have any experience in adoption implementation you would like to share with the IPSAS board to consider? Thank you for the attention and the questions. Very interesting discussions.
Thank you, Rosa. We are not finalized yet with the discussions, I guess. Thiago has a question. Timothy, I think you put down your flag, but you had a remark or a question as well.
Yes.
So, Thiago?
It's an amazing presentation, Rosa. You are amazing. This is like a roadmap for anyone who is trying to implement this. My point is, a major difficulty is to make politicians understand the information. My reality, when they understand the impacts, it's even harder. How did you dealt with this difficulty of them understanding the impacts? They don't like the figures. So that is a major problem for us, not only make them understand and then lead them to use this information, because there are a lot of information that might be sensitive. So how did you really deal with this condition, or was not that a problem with you?
Thank you, Thiago. Timothy?
Well, the truth is difficult to swallow. It was again just an observation, and it's related to this problem. And I think so. In the budget world, one of the things that sort of happened, dealing with the sort of complexity of the budgets and the fact that budgets are often presented in a way that is just as much about hiding information as it is about presenting information in a way that's easy to understand. Is this presentation of popular versions of the budget, and whether this group could think about, is there an argument for having sort of popular versions of the financial statements which actually set out this information and the consequences of that information in a clearer, more easy to digest, to understand where, and then you can deal with the issue of satisfying the auditors, but also presenting the information in a clear way that you want it to be interpreted, rather than being questioned. And I think that may be something to think about, to square this circle of how do you communicate this information better. So yeah, perhaps a popular version of the financial statements might be a way of getting around some of this problem of language.
Yeah, thanks, Timothy. I think that's always kind of leaning back to the kind of issue that transparency is not being created by generating data. It's the question, how do you convey the message? How do you kind of frame the data into understandable language? Yeah, I think with that, Ian Ross, sorry, it's in my dead angle.
Well, firstly, I just wanted to thank Rosa for a fantastic presentation. I thought that was really helpful. It really brought the issues to life. And I think that's something we should think about, given that we've got a number of standards that will have significant implementation periods, actually whether we can use the sort of presentation that you've been doing where somebody implements early as a kind of, just are there any issues that are emerging? I think similarly, being able to share that implementation experiences will be really valuable. And that's certainly something that the intention of the new Pathways to Accrual website that, IFAC has produced, supported by SIPFA, is really to share experience. So I think the more we can do that, the better. And I would say, I think the board has definitely benefited from these sorts of presentations. I mean, I was listening to you and recalling the presentations that we had when we were considering the way to go forward with the leases standard. And I think those were similarly influential. So thank you very much for that. I think it really brought that, effective date issue to life as well for the board, which is something that's very much on our agenda. So well done. And if we can share that with others, I think that would be great.
Thanks, Ian. Ross?
So one of the points I was going to make was the one Ian just made, so I won't repeat it. The other thing I wanted to note it though is because our standard is based on IFRS 9, if you are looking for more examples on financial guarantees, there's a lot of material produced by the firms related to IFRS 9 and financial guarantees that you can look to that's completely applicable to IPSAS 41, except for the non-remunerated financial guarantees because they are public sector specific. And we've noted that for future, but just wanted to let people know we're starting to think about their own adoption processes, that there is a lot of applicable material from the private sector that you can look to help.
Yeah, thanks, Ross. Timothy, I think you're done probably. Okay, Rosa, so last comment from your side?
No, thank you for all the compliments. I think if someone would like to have more technical discussions, we are available. But I would like also to thank the team that is behind all of that. And I think Magda is on the screen because a lot of from you know Magda. Magda, are you there? Because she's really the person that has managed all of that during 2 years. No, I don't see Magda on the screen. She?
Just right.
Yes, now she's there. And I think she merits also a lot of the compliments because she has worked very hard. We have very long discussions with her and her team, and I think it's important. I recommend that you need to have a very, very good team. Like that, it's for me, it's very easy because they presented the things in a very clear way to decide, and that it's much easier that if I have to start doing all the job. We'll wait and see how all these discussions will continue, and maybe in another CAG I can explain the next step. And thank you to all of you.
Yeah, thank you, Rosa. I think Ian already did my job in thanking you. It was really a brilliant presentation. Actually, I was reminded of your presentation in Abu Dhabi 2019 regarding transfer expenses, which was also equally influential. So thank you very much for that. And I can only echo your compliments for your team, having been involved in discussions with the Technical Advisory Council regarding these issues together with Ian. Actually, we know how kind of strong your team is. So compliments back to Magda and her colleagues. So thank you for that again. It was tremendously helpful. And with that, I think we move on to Ross, to the Work Program Technical Director's Report.
Thanks, Thomas. And just waiting for the slides to come up. We're a little bit behind schedule, but we should be able to make up some time here. So getting right to it. A quick work program update, and this is all in the report itself, but I will highlight a few issues. So we have, it's been a productive period since the last CAG meeting. For those who haven't been following closely, We have 2 new IPSAs since December 2021, IPSAS 43 leases and IPSAS 44 non-current assets held for sale and discontinued operations. We also issued an improvements ED that amended a number of standards. The main thing to flag, I already highlighted part of this in the opening comments, the consultation papers on natural resources and advancing public sector sustainability. If these are of interest in your jurisdiction and you do want any materials to talk to constituents, we have them available and happy to provide them. And we are organizing a number of virtual webinars over the summer on the advancing public sector sustainability. We're still working on dates and timings for those, but we're going to target particular regions of IPSAS adoption implementation, and it is important that we engage as broadly as possible on this to make sure all stakeholders are aware of this and actually put pen to paper and give us comments to take it forward. So I just wanted to highlight that point and make the CAG members aware if this is a burning issue in your jurisdiction, please reach out and let us know what's happening. And if you need support, we have lots of materials that we're happy to provide. Quickly on this slide, there are some points I do want to talk more on the top 3 projects. So presentation of financial statements, I think the discussion we just had with Rosa tees up a number of issues that we might be looking at in that. And I think Timothy's suggestion of less complicated presentation of financial statements could be helpful in getting our point across. And again, this is a broad scope project. We're just starting now. We haven't set out strongly what we might do in this project, and we'll be developing a consultation paper that will look at a number of options, and the real work on that will start over the summer, but more at the Public Sector Standard Setters Forum that we're holding in Portugal in September, where we will have a session related to these new projects, this and differential reporting. And we want to take in input from national standard setters and what's happening in their jurisdictions around this space, and different reporting models in the public sector that could be considered as we really start to scope this project and take the first steps to approving a project brief. So for the CAG, I would say stay tuned. I'm going to talk about the forum in a little bit as more of an ask for CAG members, but I just wanted to highlight that we're really kicking off the first 2 bullets on their presentation of financial statements and differential reporting, and they will feature very strongly in the forum that's coming in September 2022. And then I'm not going to talk more about these projects here, but I do want to talk about the reporting sustainability program information project on a couple slides, because we've already started to move the thinking forward. We wanted to share a couple slides with CAG members to see if, get some thoughts on that. So reporting program sustainability information is something where when we started looking at sustainability reporting, we realized we were a little bit ahead of the private sector in that we already had the RPGs that we thought were applicable. And as we've dug into this a little bit more, we feel that the reporting models in RPG 1 and RPG 3 are applicable to sustainability reporting, but maybe the problem is that people aren't seeing sustainability in that. So our proposal is that we add some implementation guidance and some illustrative examples, and I'll walk through in a couple slides what we're thinking in that space to really drive home that these reporting models can be used for sustainability and give some examples of how. This is a project where we are collaborating with the OECD Paris Collaborative on Green Budgeting, and we've been involved in discussions and following their progress to develop a green budgeting framework. And we think the framework they're developing, and it's not complete yet, will be applicable and relatable to the reporting models in RPG 1 and RPG 3. And we'll go into a little bit of detail on that in the next slides, but we are a little tight for time, so I don't want to waste too much of it. So the way we're planning on building this non-authoritative guidance is using questions in the form of implementation guidance, and some first thoughts on those questions are shown on the slide here. So RPG 3 is non-authoritative guidance on reporting service performance information. And what we want to do is use the IGs to frame the thinking that those who are working through green budgeting programs and initiatives can see the reporting model as a way to report on their green budget programs. So the first IG would be a simple one. Can an entity apply RPG3 for reporting information related to green programs? And then we would provide an answer that says yes, and explain how these green programs and the metrics related to the measurement of their outputs and outcomes fall in line with the reporting model that we've already developed in RPG3. And then again, IG2 would build on that and say, how does RPG3 apply to individual green programs? And we provide some thinking around that, that again, reinforces the principles that are in the core guidance and how they would be applied for that type of reporting. And then we thought that'd be useful to have 3 illustrative examples that look at various types of sustainability programs you would see in a green budget initiative. So through the work with the OECD and just looking into sustainability, we've come up with 3 broad examples that relate to information that you would provide in RPG1. But we think you'd want to provide that information in RPG3 and then link it back to RPG1. So the first one is a green bond example. So there are many institutions that are undertaking sustainability investments using green bonds. Those green bonds often have metrics or indicators related to the intention of the investment in green bond and what it's driving. So we would have a in-depth example that would walk through a green bond, and we're going to work with the OECD to get a relevant fact pattern and come up with something that would be helpful in that space. And again, if you look at RPG1, this links to one of the 3 service delivery dimensions in RPG1, the debt dimension. So we would again link it there, and then I'll talk more about RPG1 next. Carbon tax is another example of that's being used broadly around the world at the moment to raise revenues. And we would have a carbon tax example again that we're planning to work with the OECD to develop. And again, this links to the revenue dimension in RPG1. And 3, we're thinking of something along the lines of investments in infrastructure to mitigate the impact of climate change. And again, this links to the service dimension, service dimension in RPG1. So that's kind of the thinking so far on the scope of what we would do for RPG3. And then moving to RPG1, again, if you think about these green programs and the investments taken on and their impact, and then think about into the future how this is going to impact budgets and other information. And we think RPG1 long-term fiscal sustainability provides a model again to take those impacts, think forward in the future, how the inflows and outflows from those programs should be taken into account in assessing an entity's long-term fiscal sustainability at an entity level. So the first IG we're thinking of proposing is, can an entity apply RPG1 for reporting information on the impact of green programs on the sustainability of an entity's finances? Again, the answer to that question is yes, and it should, and it would build that into its fiscal reporting under RPG1 and those impacts, and we'd explain how in the IG. And then IG2 is, how should the green program impacts on dimensions on long-term sustainability be addressed? Again, the principles are already in RPG1. It would be explaining how they relate, similar to the examples on the 3 dimensions in RPG3. And then the last IG is which principles and/or methodologies should be applied in reporting on impacts of green programs. And again, reinforcing the principles that already exist in RPG1. So with that, I know that's kind of a full blast, but I did want to give CAG members an opportunity to share their thoughts on this proposed approach in taking forward this limited scope piece of work we've agreed to do on reporting program sustainability information.
Thanks, Ross. Any immediate reactions of CAG members to that? Timothy, Fabienne?
Okay, first. No, I just wanted to say it seems like a sensible approach. And one of the points I've been making sort of in the broader sort of green PFM space, which I lead on the World Bank side, is that, you know, I always ask the question, if a PFM system were working properly, why is there need for any specific green dimensions? Because it should take it into account, and it's one specific aspect of policy. And so here, it's no surprise that the existing guidance and standards actually actually talk to this and sustainability a lot. And so rather than coming up with something new, we can apply what we already have properly in this situation. I think that's better than trying to create something that is new. So I think this is a sensible way of going forward.
Thank you, Chair. I'm with Timothy on that. That the approach proposed is has been well thought through, I think, and it's not duplicating the IASB way forward, way of dealing with things. So it's quite specific. So I think it's a good way forward. I had a question with one of the paragraph in the report. It's paragraph 3A. And probably ties back to the discussion we had earlier on integrating budget and financial statements, financial reporting. I was actually wondering whether trying to fit both financial reporting and budget purposes wouldn't be too much of a challenge, given the differences between the two systems. In some jurisdictions like the UK, integration seems to be well on its way, but in other jurisdictions, it's not the case at all. So I was just raising the issue. Maybe it's got to do with the differences in timeline. Financial information forward-looking in a very long-term view, whereas budget is really more short-term. So that was it. And going back to the projects that are going to be taken on the board agenda with the presentation of financial statements, I was wondering whether you would consider dealing with such sort of new methods, including reporting on natural resources and environmental. I mean, there are such methods as CARE, which means comprehensive accounting in respect of ecology. That is quite, I mean, there's a lot of mayhem about that in France, at least, maybe otherwise in other jurisdictions. So there's a lot going out there. Thank you.
Thanks, Fabienne. Ross, do you want to respond?
Yeah, just say thanks for the comments, Fabienne. And I think on the natural resources sustainability space, I would say, everything's on the table at the moment because we're consulting on both. So we'll have to wait and see what we get back to decide what those next steps are and the scope and how broad we take it. But, as we are at the consultation phase, we've put the board's views out there and asked a number of specific questions. We'll have to see what we get back on that, but I wouldn't be surprised if people point us in a particular direction, and we'll have to think that through at that time.
Thanks, Ross. Kevin, then Anthony, and then we can move on.
Thank you, Thomas. Thank you, Ross. So I'm supportive of the work that the OECD has been doing on tagging of budgets and spending. I think there is a strong link between that type of work, having tags for various types of programs, spending revenue programs, and the analysis that's done with respect to fiscal sustainability. It would be useful if we had more highlight in fiscal sustainability analysis of what spending is taking place with respect to green initiatives. I think then it's in the nature of that analysis that they make these longer term assumptions to know how large these programs are that play a fundamental role to reduce emissions, to know to what extent they're growing, how are they growing relative to GDP becomes really important for sustainability analysis. So I think that type of transparency is useful. I think it may be useful to consider, if we one more illustrative example, a tax expenditure. The use of credits and things I think are going to be quite popular. So as we think of terms of bond and debt instruments, taxes and revenues, investment, we may want to consider as well just the use of tax expenditures, credits in particular, to kind of which I think will play a pretty critical role by politicians and policymakers to get citizens to change their behavior.
Thanks, Kevin. Anthony?
Thank you. Tremendously supportive of the approach that you've outlined. I think incredibly practical and able to be demonstrating the value in terms of the outcomes, not just the outputs of better practice guidance and standards base. I think it's really, really good. The area, having spent a fair amount of time in the links between budgets, the IE3, the investments in structure to mitigate the impacts of climate-related weather events. I've seen a few examples of this approach in terms of costing and budgeting. The other more sort of direct and simple link as well to me is the projects and initiatives that work towards renewable energy targets that link into that service dimension. And so in Australia, I quite often see the targets being set now, or governments aligned to targets, but then the initiatives, programs, and projects that sit within the budgets may only work towards a percentage of that, and then there's a giant sort of black hole towards getting to the rest of the targets or the projects in the pipeline. That to me would be a really interesting area to use as a front and center example of the service dimension as well.
Thanks, Anthony, for that remark. So with that, I think we can. Oh, Ian, sorry.
Thanks, Thomas. I just wanted, and thank you very much for the comments. It's good to get, Ross and I have sort of sat down and tried to think about how best to approach this, and it's very good to get some feedback on this looks a practical way forward. I just wanted to react actually to Kevin's point on tagging. Certainly, there's quite an active debate and differences between jurisdictions. We understand through the OECD work in terms of tagging, not tagging, tagging some things, not. But it certainly does fit in with the kind of inputs, outputs, outcomes model, because tagging in a sense is actually sort of focusing on the input side. I think in the discussions we've had with OECD, and I think in the way they're thinking, what they want to get away from is sort of, because there's discussions about taxonomies and stuff like that, that actually this is where they want to put the emphasis on the outputs, the impacts, in terms of the intentions around programs, rather than just narrowly how the inputs are addressed. But anyhow, that's part of the overall debate. But I think it does feel the more you actually have these discussions that the guidance that we've got actually can be applied, which is Timothy's point. That actually we just need to demonstrate and make that clear for people, and that can be done reasonably quickly. And I think that's the other thing that we've heard is this is a now problem for governments, and actually if we can show them how to use existing guidance, that will really help, and it will help in terms of the way in which the board is perceived, because speed to market is quite often one of the things that standard setters there are adverse comments on that. So if we can do something, it would be nice to be able to do that and say, it's here, use it.
Thanks. Ross, last slide, and then we break for coffee.
Yeah, this slide is really just a pitch to everyone on the CAG and in your jurisdictions who are involved in public sector standard setting that we're having the 4th Standard Setters Forum in Portugal in September 2022. I think it's going to be a very important session, or a couple of days of working through a pretty full agenda where we're going to look at sustainability. We're going to look at the next projects on our work program, so presentation of financial statements and differential reporting. And then we're going to start to look at our future strategy, the strategy for 2024 to 2028, and what the focus should be for the IPSASB as it moves forward, as it has a fuller suite of standards, as it starts to deal with implementation challenges. How does the balance of the work program start to change? What will the strategic needs be of the board from 2024 and onward? And I think it's going to be a really interesting forum. shaping up. And I just wanted to make all CAG members aware that you're welcome to join us. We're looking to get those in your jurisdictions involved in the standard setting process involved as much as possible. And we'd love for you to let us know who to contact in your jurisdictions if you're not the standard setter or involved in the process, because we really do want to make sure we get a broad, diverse group of different perspectives. And I think we've got a CAG of 25 people from different perspectives from around the world who have links to public finance and national standard setting. So we really want to make sure we use the leverage, the relationships from the CAG to get the right people in the room. So if you are having trouble finding the link to register and you want to register, let me know. We'll send you that. There is a website set up with a little more information, and I'm happy, grab any staff member during today or over the week if you're a board member listening to this, and ask questions, because we're here and involved in the process and more than happy to walk you through a little bit more about the forum if that helps you make a decision. Thank you.
Thank you, Ross. Fabienne?
Yes, thank you, Chair. I had two more points on the director's report. The first one with the timetable for the projects, and especially with the deadline for the CP and sustainability reporting. I was wondering whether the board would consider delaying, postponing the deadline. So that was my first question. And then the other thing was just for information to let you know that the French translation for the 2020 handbook has now been completed, and it covers the IPSAS 41 and IPSAS 42 financial instruments and social benefits. We are aware that we still have IPSAS 43 on leases and 44 on long-term assets for held for sale and discontinued operations to translate so far. So thank you.
Thanks, Fabienne. Response to the timetable?
Yeah, unfortunately, the answer is no. We're not taking any extension on sustainability reporting. We did think about it. We have been asked, but given the urgency of the topic and how quickly we've been asked to move, we're not able to do it. And basically, the September board meeting, we're already going to start going through responses, and it'll feature prominently as part of the Public Sector Standard Setters Forum. So on this one, we're going to stick to our guns, and if it's not in by September 9th, we won't be accepting the response, unfortunately.
Very clear message. Rosa, you put down your flag, but anyway, you were up.
I wanted to back the proposition of Fabienne, because if we want to do something seriously, because we have a lot of initiative on this topic of sustainability, we need to discuss with other teams. And now starting also the period of holidays, and it's very, very difficult to have the discussions, to have an input that is good. And I don't know if it will be possible for us to finalize our input for this date. Maybe I will send a little bit later, but I think it's important that we take that seriously, because for me, it's very important. It's one of the most important things that are on the table now.
Ian, I think you want to respond.
Yeah, I mean, I think all the points that you make, Rosa, are valid. I think, though, I would say that this is a different consultation advancing public sector sustainability reporting. It's a strategic consultation, and I think you can contrast it with, there is a lot more detail for people to consider in the natural resources consultation paper, and that's precisely why we've given a longer consultation period on that. On this one, I think the problem is actually just the sheer pace at which this is moving, and basically we need to, we're trying to get on board a moving train here, and frankly, the sooner we take the decisions, the better, because that will enhance our ability to influence, if we go ahead with this, the developments elsewhere. So, and I think it was certainly a discussion we had with the Public Interest Committee, and their comment was really, you've got to move quickly, and basically 6 months would be too long. Because even if we give 6 months, people will still want more time. So that's the reason why we've taken the decision. But I think it goes back to these are high level questions that we're asking, as we'll discuss a bit later, and that's really why we're seeing it as different. Both the level of questions, but the fast-moving agenda, and if we're going to get on board, we need to get on board.
Yeah, thanks. I think there's always a trade-off between speed and comprehensiveness, quality, things like that. But I kind of fully understand the necessity of speed here in this specific area. So with that, I think we can break for coffee. We are 20 minutes behind the schedule, so actually our coffee break is now over. But you seem all to be very energetic, so thank you very much for a very constructive and entertaining morning session, and thanks again to the presenters of this morning session. I think it shows how interesting it was, that nobody needs a break obviously, but we will break. We all deserve a break. Let's break until 15:15, so for 15 minutes. Please be back 10:15. Thank you.
So if you see that, it goes there. Yes.
I know,
the-
camera there.
Yeah, yeah.
So welcome back. Oh, Ian.
It's not because I've been naughty, it's just because the camera misses me when I sit there using this mic. So, well, that's what they tell me.
This is really a pity, Ian. This is really a pity, the camera missing you. Right, so welcome back, everybody. After a well-deserved break. We move now into the measurement discussion. You probably all remember that we already had a short discussion around public sector measurement and the public sector specific measurement basis. So we are going to continue that. The session will be run by Tashreeq. Tashreeq is probably known by everybody now. So Tashreeq, if you want to lead us into the topic, please.
Thanks, Thomas. Good morning, everyone. Just confirming that you can hear me clearly and my mic is not breaking.
It's not breaking, but okay is something different, I would guess.
And can you hear me clearly?
Yeah, I think you need to go a little bit closer to the mic and speak up, but then
okay.
I can hear you okay.
Okay, is this a bit better? Okay, perfect.
Yeah, it's better.
Cool. Okay, so I'll get straight into it. With regards to agenda item 4, staff considered it wise to bring this paper to the CAG after spending this quarter evaluating constituents' responses to SMCs 5 and 6 of ED 77. These SMCs focused on the current value measurement basis developed by the IPSASB, namely the current operational value basis, or COV for short. The COV basis was essentially developed in response to constituents' concerns that the fair value measurement basis is difficult and inappropriate to apply, given that the concepts of the highest and best use and a market-based measurement basis are both not applicable in the public sector. Bit of background on COV before we go any further. The objective of a COV measurement is to estimate the value of a non-financial asset, how to achieve the entity's service delivery objectives. Now, holding an asset to meet a service delivery objective essentially means that the asset is held to deliver services rather than it being held for its ability to generate profits. Now, in analyzing the responses to SMCs 5 and 6, staff noted that approximately 2/3 of respondents supported the direction and objective of the COV basis. However, constituents' responses were quite broad, and they ranged from the vagueness of the definition of COV to a request to provide additional guidance and examples that allow the COV definition to be operationalized. Now, given the wide range of constituents' responses, staff considered it prudent to revisit the core principles of COV in this quarter, taking into account the additional views and information provided by constituents. Now, a fundamental concern that constituents noted is that the COV basis does not reflect the value of the assets in the way that the public sector uses them. So in other words, in order to deliver the direct services to the public and or to provide a wider community benefit. Now, given that this comment was raised by a few respondents to SMCs 5 and 6, staff took a big step back this quarter and essentially reevaluated the lens through which a public sector asset is measured. Now, in other words, in order to measure the asset, staff reconsidered whether the service performed by the asset should be valued or whether the physical items that comprise the asset should be valued. So, next slide, please, Dave. Thank you. So essentially, staff identified 3 lenses through which the measurement of public sector assets could be viewed. So firstly, we have the outcomes lens. This is the broadest measurement approach available, and this lens values the asset based on the broader economic, social, and environmental benefits that the asset provides. Then we have the outputs lens, and this lens essentially values the asset based on the outputs the asset is held to provide. So in other words, it's referring to the services that the asset delivers to the public. And lastly, we have the inputs lens. So the inputs lens values the asset based on the inputs that comprise the physical asset. Now, it's important to note that the outcomes and the outputs lenses, so the two broader approaches, if I can call it that, are particularly relevant in the public sector, where entities generally hold assets to either deliver a service or provide a wider benefit, or both. Now, during the development of ED 77, the IPSASB agreed to value the asset based on the inputs that comprise the assets. In other words, they were focused on the inputs lens. And the IPSASB's decision was based on the knowledge that an input-based valuation better reflects the amount that an entity would incur at the measurement date to replace the service capacity or service potential of the asset. Now, during this quarter, in analyzing the IPSASB's decision, staff noted that where the outputs and the outcomes-based approaches present challenges, the inputs-based approach presented solutions, because the inputs-based approach, which is essentially what is in ED 77 currently, it's consistent with other IPSAS principles. It is a well-established methodology in the evaluation community, and it is also consistent with the underlying core principles of ED 77. Now, it's important to also remember that 2/3 of respondents to SMCs 5 and 6 essentially agreed with the overall direction and objective of COB. Therefore, during this quarter, staff have not proposed any significant changes to be made to the measurement lens used to develop the core principles of the COB basis. And we recently received a comment from an IPSASB member stating that there were minimal changes recommended to the COB principles made in the ED. Now, at this point, we need to emphasize that significant work went into considering alternatives to COB and ultimately the underlying core principles of COB during this quarter. And ultimately, staff concluded that we will remain with the COB proposals in ED 77, but we will provide further clarity on how to apply COB and to rather simplify the core principles in the COB measurement basis for understandability. Next slide, please, Dave. Thanks. So therefore, the question staff has for CAG members is, do CAG members agree that the IPSASB should continue developing COB by focusing on the valuation of an asset based on its inputs as originally proposed in ED 77? Okay, at this point, I'll hand over to Thomas for any comments or questions from CAG members.
Yeah, Tashreeq, thank you for the introduction. Perhaps you could kind of just explain once again why inputs are reflecting best the value of the service potential embodied in the asset. I think that's the most relevant aspect.
Sure. So essentially, I think if we go one step back, the inputs, basically the inputs approach or the inputs lens, it's more consistent with the underlying principles in IPSAS, and it's better understood by the valuation community rather than the two broader lenses. So the outcomes and the outputs approach, because that doesn't tie in with the underlying principle currently within the definition of COB, that is to determine the measure to replace the service potential or service capacity of the asset. Dave, is there any other point you would like to make on that question?
I guess just one point I'd like to echo that Tashreeq made is even though it doesn't, staff's proposing that we go ahead with the ED 77 proposals, we spend a significant amount of the quarter exploring other alternatives, the outputs lens and the outcomes lens. And even though at a conceptual level, they were attractive, what we really ran into is from a reliability point of view, there's not really a conceptual way to get there. So again, I have nothing more to add than that, but it's really trying to fit either the other lenses into our conceptual framework we really run into a wall when it comes to recognition of the asset because the measurement just doesn't hold up from a relevance or reliability perspective.
Yeah, thanks, Dave, for this addition. I can understand the reliability issue. Definitely, that's a topic I see and I understand. I just have problems to understand why the input approach, which kind of refers to the inputs to the existing asset, is referring to the replacement of the service potential embodied in the asset at the current balance sheet date. I'm not so sure whether that's clear to everybody, but Ross.
Yeah, I'm going to come back more on the board's consideration on this because we've said a couple times in this presentation, we've considered in this quarter those two outcomes, outputs, lenses, but it's actually much broader than that. IPSASB has been thinking about this since 2016 or even earlier. And we had a consultation paper where we talked about the different ways to measure public sector assets, and we were guided down this route. And as Tashreeq's noted in our measurement guidance in existing IPSAs, because it's impracticable to measure outputs and outcomes, we have to use the inputs method as a proxy for the service potential that can be provided by the assets. Now, even the valuation community and the board will hear about this later in the week when we hear from a valuation expert. They're struggling with this measuring the services outcomes, outputs directly themselves. So there's not a valuation methodology that can be adopted. So there is a reliability issue that we have here and why we have to focus on the inputs at this time.
Yeah, thanks, Ross. That was helpful as well. Fabienne, then Karen, and then I think we can move on to the question which is on stake. And Kevin, obviously, yeah. Fabienne, and Karen, then Kevin.
Thank you, Chair. That's
Then
actually
Jeffrey.
on the question. So my comment is actually on the to answer the question. So I actually really like the staff and the analysis of staff because I find it quite comprehensive and it ties to the current issue of the sustainability reporting, and probably at some point when sustainability standards have been stabilized and at some point outcomes on outputs might be able to be measured somehow. And at that point, the service might be easier to measure, to assess. But right now, it's quite difficult. So I do agree that the input, the underlying asset is the right way forward. Assessing the underlying asset is the right way forward. Thank you.
Thanks, Fabienne. Karen, and then Kevin.
Thanks very much, Thomas. It's probably a topic on which I feel I can wax lyrical, and I've probably done the full cycle of thinking around where you go with this from the first days when IFRS 13 came in and we were trying to work out how to implement it. I won't do that right now unless it comes back in terms of the questions, but I guess my thinking probably has gone full cycle through this, and that may reflect some of the thinking that staff has had. I think that the difficulty is the one that perhaps Thomas just brought out, is that when you think about service potential, you think about outputs. And I think that's the confusion in terms of language that can arise from this, and perhaps the one that you need to get behind in terms of explaining that. I do think, though, that looking at the actual assets themselves is the only practical way of doing this. I think service potential is the language that we use to not talk about cash flows, because we're not concerned with the cash generation. We're concerned with what the asset can do, and we want the asset to have a capability to do that. We don't necessarily want to measure how many operations happen or how many children get educated. We're not looking at it through that lens, but we do want to know that the school is big enough to educate 1,100 people, and it's that sort of capacity that we're interested in. So I think inputs are the right way to go. But I think it's just reconciling that language where we think about service potential perhaps as an output, when I don't think actually we mean it as an output. And I think that's the disconnect that might be there for some people. Hope that helps. Thanks.
Thanks, Karen, for clarifying that. I think that was really helpful, because it's really this kind of, you're kind of led by input being the service potential embodied. You led to kind of thinking of this is the outputs we are talking about, and so you're kind of confused or get confused. I think that's a good observation. Kevin, then Jeffrey, and then we go back to the room.
So I think it's Fabian's point though. I'm just wondering if with the implementation of inputs, how does it impact like something like our efforts to promote sustainability? So I think I certainly understand, like from a practical perspective, focusing on inputs is just so much more tangible. We feel we have better estimates, but in a world where we're trying to take carbon out of the economy, and like, and again, does that service potential, even from an input perspective, does it capture the fact that if we an asset like an energy a charging station type of asset has a different type of value that goes beyond it's just even its replacement value than some type of gas station? Should it be owned by the public sector?
Thanks, Kevin. Jeffrey?
Thank you. Yeah, I can see that there's not many possibilities of how to do this, and this seems to be the one that's probably the most practical. I mean, my point is actually, is current operational value the right term? Because I think that's what might cause the problem, because it sort of seems to indicate you mean something else. So perhaps current operational value is the thing that should be looked at. Perhaps it should be described differently. I couldn't suggest what that should be at the moment, but that might solve some of the current possible confusion. Thank you.
Yeah, thanks, Jeffrey. I think there's certainly some reasoning behind that. Terminology is creating confusions. For me, actually, input is creating the confusion, because when I think about input, I think more about historic cost rather than thinking about I'm in the current cost model, because input for me is what did I put into to get the asset, which was historic cost, obviously. So it's always to look at that from the right perspective. So Agnieszka, and then Timothy.
Yes, thank you, Chair. I admit that all of those concepts are really difficult to grasp. It seems that the input approach is the only practical right now. Maybe that's the way how you present it in a very good way, but it's not only a practicality, but for me, it's also a conceptual issue. Maybe I didn't get something here, but if you talk about outputs and outcomes, they are delivered through collective use of different assets. And what we're talking about here is measurement of individual assets. So that's also this conceptual issue here. And last but not least here, it's a complexity issue. I wouldn't sound like being not open to, let's say, new ideas, but we're talking about public sector entities. And that complexity issue is really vital, because there are a lot of countries and entities that didn't somehow grasp the current theories, which are also quite complicated. So I would add that also on the list. That's about inputs only, because we'll have some more general comments, but that later on. Yes. Mm-hmm.
Thank you, Agnieszka. Timothy?
Thank you. I've been sort of, involved in trying to sort of deal with this from the budget side of things, in terms of, there are sort of innovations like program budgeting, performance budgeting, and trying to come up with a sort of outcome and performance information in the budget that tries to measure what government is producing. And it is hard, and it's very difficult to do it in a standard way. So we're in the business of standards here, and the things governments do and the way they measure things are different in different countries. So trying to come up with a standard is hard. Now, I think at the last meeting I revealed my naivety on this topic, but anyway, let me carry on, soldier on. But the way I think of these things, and it's a little bit to where Thomas was talking about, so that there are various inputs which going into producing an asset. But for me, an asset is an input into providing services. So if you think of schools, a classroom is an input, teachers are an input, instructional materials are an input. Only one of them is an asset, the others are operational inputs. But if one is measuring outputs, the output of it's not just the output of the asset, it's the output of these combined things. So actually, it's a bit of a red herring, sort of saying that this asset is going to produce this output. I'm thinking of there's a comedy series called Yes Minister, and there's a and I always use this in my PFM training. There's an episode called The Compassionate Society, where there's a hospital with lots of administrators, but there are no doctors and no patients. And so here you have a newly built asset which is not delivering anything. So I think that the point is I'm trying to make is that I think you're going down the right route in measuring the input. I think maybe we do need to come up with a new name for operational value, but I think it is the right way to go that you're doing it. But I think it then begs a question of the broader sort of performance metrics. And if I look at what we're going to discuss next around sustainability, there's an ambition of going beyond the input, but it's, for me, it's a bit of a health warning of let's keep it simple and name it as it is. And I think that's probably the way to go. But bear in mind what we're talking about in terms of an input. An asset is an input into delivering a service.
Let's keep it simple is always a good recommendation. Thank you for that. But I think it leads exactly in the same direction of what Agnieszka just said, saying, okay, how can I evaluate the value of a single asset, which is kind of providing services in the context of other, might it be operational resources or other assets? I think that's the fundamental point. It was a good point, Agnieszka, as well. So with that, I'm going back to the screen then. It's Paul, Key, and Anwar, and then back to the room, Rosa.
Thank you, Chair. Pretty much our constituents were in line with the staff view. In respect to the outcomes lens, it was felt that this would be a very inappropriate lens from which to prepare a measurement basis and would also be very difficult to apply in practice. There was some sympathy for the output lens. It was felt that in certain circumstances this could be useful to indicate service potential, but it was also felt that it would be very difficult to operate in practice and would hamper comparability. It was also pointed out by one of our respondents that services provided in kind can be valued on the basis of the services provided, but very few organisations do this in practice, which perhaps indicates practical methodological difficulties with this. So in summary, therefore, we support the staff's current conclusion. Thank you.
Thanks, Paul. Key, then Anwar.
Thanks, Chair. I think the answer is definitely yes. IPSASB could continue developing code based on the input approach. First, the code needs to be developed to meet the information needs of users, since most public sector assets do not satisfy the best and the highest financial use as fair value requires. Moreover, due to the high uncertainty and the lack of the real market value for many services provided by the public sector, valuation of assets based on outcomes and outputs may not work effectively. In general, only the input-based approach can relevantly and reliably measure assets. However, I think the difference between the replacement cost and the code from the perspective of inputs should be clarified, and what measurement techniques should be used to measure inputs in code is another important issue. This is critical in determining whether the code can be successfully implemented. I recommend that IPSASB could conduct an in-depth analysis on how to measure inputs in the code and provide practical guidance. Thanks.
Thanks, Key. Anwar, then Rosa. Anwar, you on mute.
His answer is definitely yes. We do agree with the current operational value basis for a public sector measurement. But however, I've got one observation on the input approach, that how does the input approach account for any future variation or changes in the potential service potential of the asset, which can be foreseen. So there must be provision as well to ensure that any changes in service provision is duly incorporated to ensure a more fair value of the asset concerned in the future.
Thanks, Anwar. Any reactions, Ross, to that? Ian?
Well, I think it comes back to a lot of what the discussion has been around, which is actually we really need to clarify the concepts here and to focus on what are we actually trying to get a measure on. And it's rather like the situation we faced with Recommended Practice Guideline 1, where yes, there's a whole host of things that could happen, but the projections that underpin RPG1 are on the basis of current policies. And I think, in terms of this, the real difference between the proposed current operational value, or whatever we decide to call it eventually, and fair value is the concept around highest and best use. And so highest and best use allows you to, if you can access that, if you can sell it in the market, you can, that's for whatever. Whereas current operational value is about current, it's about what the asset is doing in its current usage. And I think that's the kind of fundamental, or the fundamental difference. Personal view, the board is going to be discussing that with the benefit of direct input from professional valuers. So I think will help us with those sorts of concepts. So I think, that's going to be really powerful for the board to actually understand what happens in practice. But I think, we're going to have to focus on that. What is this being used for now? If it's not available for sale. Personal view again.
I understood Anwar's point as being kind of how do we account in subsequent measurement and in future periods for changes in the service potential. But probably that's the same as we do it for fair value. If you have in the future changes in the revenue streams, you kind of then account for it in creating the new fair value assessment. That's pretty easy, I guess. Right. With that, I'm coming back to Rosa and then Gustavo.
Thank you, Thomas. I fully agree with the proposal of the staff. I think a lot of information has already been said. It's true that outputs and outcomes are very important, but it's very difficult or impossible to do that in an individual asset. And I think that it's a kind of information that is very useful, but I see that more on a performance reporting and not on the calculation of the value. And it's what we are trying to do in the performance reporting. We are trying to give the KPIs of outputs and outcomes in a global way.
Thank you, Rosa. So Gustavo on the screen, and then Timothy, are you back again?
Thank you. I think an output-based approach is attractive, but it would require strong assumptions and forecasts. So for me, it's not practical. And I think an input-based approach for COP would also make things easier for the auditors to review this information. Thank you.
Okay, thank you, Gustavo. Timothy?
Right, I was just in terms of adding to my thoughts about simply the thought process of what we're trying to measure here. And I think one of the issues is, let's say, take a specific service. It's not necessarily a qualitative thing, but it's specific to each service. And when one is sort of evaluating an operational value, one of the questions sort of I ask is there a, within, let's say, you know, let's say the education sector, you've got a primary school, or in the road sector, you've got a standard of a type of road. And one of the things is I suppose the question you need to ask, is there a standard in place for that infrastructure asset in that area? And then does the asset that is there sort of not meet or exceed the standard for that asset? And then go through some kind of process around that. So you're not measuring the output it's producing, but you're going through a process. And I know a lot of the countries sort of that I work in, that standard doesn't exist. Okay, so the basis by which you're measuring is and so part of this process is saying, if you're looking at your operational value, you need to, first of all, there needs to be some kind of a standard in place against which you're measuring whether that input is, you know, that asset is has the right features to deliver that to deliver that service. And maybe there's a sort of due process in this in terms of what we're trying to measure. I may be off the mark, but it's just a thought that came to me during this discussion.
Thank you, Timothy. Jeffrey, once again.
Yeah, thank you. Sorry, I didn't really want to come back, but I was been a little bit inspired from what I've heard. Yeah, I'm just wondering what use will this information be? Because I think there seems to be a bit of a danger that, you know, we can produce this, so we will. But is it going to be very useful for decision makers? I don't know. I'm just trying to think how you could use that information. Now, I can see fair value when you're trying to work out the value of a company, for example. I can see where that would, you know, comparison with historic cost. But somehow in the public sector, and trying to see how that would fit in the you know, the thought processes actually. So my main point is, you know, just because we can, should we? Thank you.
Ross, any thoughts regarding that? Dave?
Just a clarification question back for me. What use is current operational value, or what use is measuring at outputs and outcomes?
The current operational value in the way that it's being done at the moment in terms of input, which doesn't seem to really be current operational value anyway. Because I can't really see how you could have current operational value, which could mean one of three things. And I mean, one of which is very different than the other two. So
I'll let Ian come in because he has his flag up, but I'll respond as well if you go ahead.
So I think there's several issues here. There's the issue that the board has frankly struggled with, and I think the accountancy profession has struggled with, which is actually, do you measure on a historical cost basis, or do you measure on a current value basis? And there are differences of view on that according to whether you believe that what you're being held accountable for is what you spent originally, or actually it's what are the relative values of the various different assets that you hold in your asset base at the moment. And you get different, you know, you get different information according to which basis of, you apply. Sorry, basis is the wrong term, but anyway. And so that's one issue. I think the other issue, which is really what we're going to be getting input from the valuers on, is what are they actually, how are they using the information, and what precisely are they measuring, and how does that fit with the overall philosophy and the explanation of what current operational, what we currently call current operational value actually is. So I think, you know, some of this is actually about the clarification that's required. And I've been very interested in the discussion that we've had around, you know, Karen's points around service potential, about how does inputs fit in with this. So I think a lot of this is actually going to need to be fed into the discussions that the board will have on Wednesday, listening to you know, the actual, what actually is done in practice to get these values, because you know, I think there is a tendency for accountants to kind of operate in a, you know, with a black box around what the valuers do, and aren't necessarily getting what they think they're getting from, you know, the information provided. So to the point about is there a methodology? Well, in terms of the valuations, yes, there are. There are international valuation standards. And so we need to understand what those produce, and therefore how does that relate to what can be represented in financial statements and why. So I think those are the questions. But I would give those two, I think there are those two distinct questions, historic versus current value, and then how you actually produce those.
And that was actually my thought when I was listening to Jeffrey. Jeffrey, I think there are kind of two steps of decision when you kind of think about what is the most useful information. The first is historic cost more useful than current value? That's the first question you need to answer yourself. And if we're talking about an asset which is used for service provision, but which was acquired, let's say 10 or 20 years ago, the question really is, well, how useful is historic cost? So that's number one. If you decide as management that current value would be the most useful method to provide information, which is kind of any value to readers, then I think the question is it an asset which can easily be sold and which kind of the management would have the intention to sell, then fair value would be the right answer. If not, then we are talking about something which is probably valuing the service potential embodied in the asset. And then obviously this is the second question regarding, or the second decision you need to make, is fair value, or is kind of the current operational value, however you call it, is that providing the more useful information? And I can think of service potential being kind of the answer. We use that, and it's practical because we use it in IPSAS 21 as well. When we think about restoration approach for assets which are used for service provision, we also think about how much would be the cost to restore the service potential embodied in an impaired asset. So we already have the thought in this approach. So I see Catherine.
Yeah, I mean, it's certainly a question that's always worth asking, isn't it? But I think the other thing that I was going to say was you're right, and so was Karen, for example, when she was talking about all the debates we've had around all of this. But I think that there's a very strong stewardship and accountability point in all of this, which we shouldn't lose sight of. I'm a taxpayer. This is my money, that's being used here, and that means that there's lots of things that I want to understand about what the government's doing with that money. But one of the things I'd quite like to see is whether we've built assets and have value on them that gives some kind of meaning to whether the government's actually doing the right things with them and looking after them properly and producing value for money. And I think that perhaps that's an even stronger imperative than it is in a private sector context.
Agree. Thanks, Catherine. So I don't see any more flags up or hands raised. So with that, I think as a summary, I heard a lot of strong support for the approach as suggested, but I think there's still the need to clarify, as Ian rightly said, to clarify the concepts, clarify terminology in order to kind of make people understand what really the meaning of current operational value, or whatever term you might use, would be. But in general, I didn't hear any opposition regarding or concerning this question. So with that, I suggest, Tashreeq, we go to the second issue.
Thanks, Thomas. Thanks also to all the CAG members. Those comments really help us. So if we go to issue 2, so with regards to issue 2, it's important to remember that approximately 2/3 of respondents actually supported the direction and objective of the COV basis, in particular the need for a measurement basis designed to measure assets held for their operational capacity. And that's basically what we're talking about now. Again, during Q2, when we revisited the core principles of the COV measurement basis, we found that ED 77 proposed that a public sector measurement basis essentially measure assets in their existing use. Now, the existing use concept measures the asset by disregarding potential alternative uses and any other characteristics of the asset that could maximize its market value. And this is a key principle in the public sector measurement basis, which was identified in the measurement consultation paper and reiterated a number of times in the responses to SMCs 5 and 6. Staff have therefore considered it prudent to emphasize these core principles, or essentially the existing use, as a core principle of the COV measurement basis, and to develop guidance in IPSAS measurement that clarifies these principles. If we move to the next slide, please, Dave. Thanks. Therefore, the question staff has for the CAG members is, do CAG members agree that the existing use concept is a core principle in COV and should be clarified in IPSAS measurement in order to better emphasize the key difference between the public and the private sector? At this point, I'll hand over to Thomas for any comments or questions from CAG members.
Thank you, Tashreeq. Karen, Agnieszka?
Thank you, Thomas. I think this is probably where my thinking has gone full cycle over 10 years. I think if you'd have asked me this question 10 years ago, I'd have gone, absolutely, you need to have this and existing use baked in. Now I'm less so sure on this. I think the points that were being made about sort of the objective of a measurement base and its purpose and what you want to get out of it are really, really important. And the reason why 10 years ago I'd have said absolutely yes is because of the huge difficulties we had around what were complex issues around schools and how you value a school and highest and best use in that regard, because good schools tend to have, if you were going highest and best use, would have a very high value because everyone wants to send their kids to those schools. And so property prices go up in that area because the school is so good, and you kind of get this positive reinforcing cycle that says that if you built a new school, it would be really, really expensive. And clearly that's not where we wanted to be. So I think I'm not so clear that you need a separate public sector measurement basis. I am clear that you need to have application guidance that talks about operational assets that you're not holding for highest and best use. But if you're not holding it for highest and best use, can you use the existing principles in IFRS 13 and they work perfectly well? And I think that is a question that I'm not clear on. Having worked in jurisdictions where that has been the method that's been applied, I didn't come across too much difficulty with it. It kind of worked. A bit more application guidance would probably have been even more helpful in that. But I think we do have to be careful about undue complexity. Introducing another measurement basis, is that going to be more complex for the public sector? Is that going to push up the valuation of assets in the public sector? It's already a very difficult area. And in fact, in the UK, there's a thematic review going on at the moment of asset valuation because of some of the issues that are being encountered and the cost of doing some of this. So I think we kind of need to be careful what we wish for in this and be really clear about what we're trying, what needs to have a different valuation basis and why, and whether it is really a bespoke valuation basis or whether it is working out what you need to apply the existing valuation basis to in a different way. So perhaps a series of questions there rather than answers, but I think hopefully some food for thought.
It is definitely food for thought. I think I can understand where you're coming from. In your school example, my only struggle is that probably the question would not be how much would it cost to build a new school, but the question would be how much would I get to sell the property where the school is on, right? That would be highest and best use question.
Correct, but no one wants to sell. I mean, if you've still got students, you don't want to sell the school. That's not your reason for holding the asset. So I think it's the reason for holding. That's why fair value
is not the appropriate measurement basis, I think.
I think it's about scoping out why you're holding the asset rather than necessarily level 3 works. I think in valuing it, as long as you're clear that you're not holding it for highest and best use. So it's scoping out the things that you're not holding for highest and best use that I think is the important thing.
Right. Thanks. Agnieszka, then Catherine, then Anthony.
Okay, thank you, Chair. I think my thinking would go into the direction of Karen's, if I got you correctly, Karen. But I also struggle with this existing use concept or entity-specific concept as being the typical for public sector. I have a problem with that, and it seems that that's the main reason why we're deriving from the general accounting principles, which I'm always very cautious about. My idea is that we should first of all try to check whether the existing conceptual ideas would fit into the public sector with some application questions, not the conceptual one. So, for example, I think I would call it like a difference between assets-based perspective and business model approach. What I mean by business model approach is a general issue, also applied in the public sector. So, for example, what you're saying and what you're giving an examples that entity-specific approach is needed. So, for example, if you look at the exposure draft 77, you say that current operational value of a vehicle is less for an entity that usually acquires a large number of vehicles in a single transaction as compared to those that acquires one vehicle. But is it typical for the public sector? It's not. It's a typical business decision. So if I look for business decisions, so it's not like we have assets and we figure out what to do with them. We have an aim in our operation, and that's called a business model. And in private sector, it can be delivering some kind of services, and in public sector, it's also delivering certain type of service. Then I check whether I do have assets that enable me to deliver such service. So it's a different, for me, it's a bit different point of view if you look at it. You say that the main, let's say, issue here is highest and best use, but maybe that's the idea from the discussion here. Maybe we should look at the highest and best use from a different angle. I mean, public sector angle. So we're not saying that you can use this concept of highest and best use, but we should look at it from a different point of view, not the profit making, but how we deliver services in the public sector. So maybe this highest and best use should be some kind modified into the when applied in the public sector. And what you're saying is that you're planning to further clarify concept and simplify that concept, which seems really reasonable. And my idea is that apart, I don't know, 1/3 of respondents said that it's a good direction, but you need to clarify to apply this concept. So for me, it's a contingent asset. And the question is whether you are able, is it feasible to come up with the solution which is clear and simple and still its current operational value. So are you able to do that, to recognize that contingent assets? That's the question from the public interest angle. Thank you.
Thanks, Agnieszka. Catherine, then Anthony.
Yeah, I mean, I think it's quite a complex issue, and I think those last two comments I've got lots of sympathy for. One of the things that slightly bothers me about ignoring highest and best value is where you're losing sight of where there might be better alternatives to do things, particularly when you don't actually have to be in a specific geographical location. Because we keep talking about hospitals and schools, but of course governments have a lot of office space. And the UK government is currently rationalising its office space and moving to a more agile model and selling off some of the assets because they've realised that they don't need to have all the same people in the same places, and an office is an office, including where people work at home, of course. And I do worry that that can get lost if there's an entire focus on an existing use basis. I mean, but even for a school, for example, you may get to the stage where a school is simply not fit for purpose in terms of how education is deemed desirable to be delivered. And the best bet would be to sell it off for development, use another school site nearby to create another bigger school, for example, build a new one that does deliver the things that you want. So I worry that the existing use basis favours standing still in a lot of ways, when actually asset rationalisation and movement is potentially quite a good thing in a public sector context.
Thanks, Catherine, for that warning. Anthony, then Dave and Timothy. Anthony, you're on mute.
Yeah, just having a little challenge with my mouse at the moment. Sorry about that. Look, there's very supportive of Karen and the previous speaker as well around the highest and best use. And I can't help but wonder if the concept of restrictions has been well considered in its application into the highest and best
Your mouse is working. You're back on mute.
Yes, it is back. Thank you. I was just talking about the thinking about the restrictions, the consideration of restrictions in the highest and best use valuation. If use the school analogy, I'd consider, well, what restrictions are in place that would require the school's highest and best use to continue as a school. The concept of a legal restriction is a government making a policy statement to build and operate a school in a particular area. Is that a significant enough restriction for it to be used for only a school and nothing else? Is that practical? The other thematic I've heard is around the complexity associated with the more the output side and the outcome side, but such as looking at the increased value of properties around the school, things like that. When we look at budgeting exercise and looking at behavioural impacts associated with costing, government budget policy and things like that, we specifically discount second round behavioural impacts because the level of uncertainty and the level of ranges associated with those. So I think that's kind of a side issue to the argument anyway. So I don't think that's a sort of a valid discussion. But the other area where I think that continuation of highest and best value, recognizing restrictions and really sort of making a better use of that element of the valuation is, if I were to take an example and say, okay, imagine a technological advancement that tomorrow made the concept of having a school with classrooms and hundreds of seats and those sorts of things, the best use, and we're still valuing on an existing use. Are we reporting fairly? Are we providing valid information to users of financial statements, etc.? If overnight its value essentially halved or disintegrated as a result of technical obsolescence, I can't help but think the value of the asset in terms of its current value has to be a key consideration, not only across public sector entities looking at comparative understanding of value and but also across financial years as well.
Thanks, Anthony. Just one warning, when listening to the comments, I think, again, we are running into the risk of mixing accounting decisions and operational decisions. I think the question, what assumption in terms of use we are using for measurement is not kind of precluding the operational use in the future. So when we are talking about kind of using existing use is potential avoiding developments in the future, I think we are running a little bit in the wrong direction, making it more complicated as it is. Now we are really only talking about what's the assumption regarding the use of the asset when we are measuring it at the balance sheet date. It's not precluding any political or operational decision how the asset should be used or anything in this direction. So probably we need to kind of, Timothy, recommendation, keep it simple and not overcomplicate it. Timothy, back to you, and then Dave, I think you put down your flag.
So I think Catherine said a lot of what I was going to say, but but then it does come, perhaps being simple is actually not being complicated. But I think you need both. You need information on the highest and best value, and you need information on the current use value, and one of those needs to go into the balance sheet. But then if there is a big difference between the two, that is the basis for making a decision on how to do, that your assets are not being used efficiently, and there needs to be a decision of whether to redeploy those assets. And I think that may be one way. And so, in your disclosures, there maybe need to be reporting on both, with a justification what's in the balance sheet, but also if we are playing this accountability role in the financial statements, that provides the accountability of saying if there is a big difference, there needs to be an explanation of why.
Ian.
Thanks. Yeah, I think kind of where you've brought us back to is kind of what I wanted to say, because this is exactly why we've approved IPSAS 44, because that is precisely on the situation where you can actually realize the highest and best use value. Essentially, you can actually dispose of something, and I think in getting there, my own pet example is my local hospital, where there was a service reconfiguration, but it took 20 years to actually get through all the various different regulatory approvals and so on. Basically, until all of those approvals have been put in place, there is no way that you can be held accountable for an open market value for the site. So you need something in the interim which holds those operating the asset, the site or whatever, the school, to account. And I think, when you look at the support that we've received both through the CP and through the ED77, there is a need for something else. Part of the problem here, I think, is actually, there are different techniques in IFRS 13, and those can be used in different ways according to the circumstance. Some are more pure market, some are more theoretical as you go down the hierarchy. And the challenge then is actually, can you use those techniques in a different way to get at something that measures what the public sector is using? And I think that's where we partly need to articulate what is it we're trying to measure more clearly. And secondly, I think we really need to listen to the valuers in terms of what they actually do and the limitations of what they actually do, and what that can help us present in the financial statements, because there's a lot of what ifs, but essentially we need to understand the way in which the information is being generated and what is being produced for us. And then we can make some decisions as to what are we trying to do here, be clear about that, and how that is being serviced by the valuers. And I think that's really, we have to keep going back to what are the options for generating information that will help us with that, that question that undeniably, I think our stakeholders have said we do need something here.
Thanks for the summary, Ian. Actually, I would like to try to close for this session in order not to kind of follow more behind the agenda, but I think we heard a lot of interesting thoughts. kind of going in the direction of kind of reconsider and better explain why IFRS 13 principles cannot be applied easily, even without highest and best use. Karen, I think that was your point, or kind of would it be a solution to kind of look at highest and best use from a different perspective, in a different angle, not from a kind of a use or sell perspective, but in a different, in the aspect of public sector operations? What would be the best use in providing services and using the asset for providing services? So I think ideas around that, I think that was very useful. So thank you for these inputs. That was very good. And with that, I think we can move on to the next agenda, and actually the last agenda item for today from a technical perspective, which is advancing public sector sustainability reporting. And the purpose is actually to run through the consultation paper and to get input on the PVs and SMCs of that. And Dave is moderating that. I think we will spend 30 minutes now until 1:45, and then have a break, and then kind of can continue, right?
Thanks, Thomas. I'll let you decide. You can, whenever there's a good chance for a break, we can stop.
Okay, now.
So this will be a slightly unique session. And one point I wanted to respond earlier to Rosa and Fabienne, and it really ties into this session, is you indicated that the board might consider extending the comment period for this document. And one way that we're really working hard to make sure that we hear as many stakeholders as possible is through an event that I'm going to try to host right now, and that's to have virtual roundtables, and that's to hear from stakeholders that we don't always hear from in written form. All the comments that we hear from those roundtables will be included in our analysis. So Rosa, if there's different departments you need to talk to, I would encourage them to come to the event, and we'd love to hear their views there, and we'll make sure that's included in the final analysis. That being said, what we'd really like to do here is, given that we have these roundtables that we're planning for July and the timing of the CAG meeting, we thought this would be an excellent opportunity to hear from you and get your diverse views and advice for the IPSASB and how to move this consultation paper forward. Any advice that you provide as part of this will include in our roundtable analysis and ultimately in our response analysis, and it'll be analyzed by the IPSASB in Q4 of 2022. Because we don't have a lot of time, we've got just over an hour. What I ask members to do is, as we go through the preliminary views and SMCs, if you agree, but you agree for reasons that differ from what's in the paper, please put your flag up and let us know. If you disagree, please put your flag up and let us know. But if you agree for reasons in the paper, silence is gold in this case. We will take note of that, and it's really important for the IPSASB to know that you agree, and we will take note of that and make sure that's included in the analysis as well. And it'll also help us make sure that where there are significant comments that we need to hear, we have time to hear those as we get through the PVs and SMCs. So I'll go through at a high level the consultation paper. I will stop at every preliminary view or SMC to make sure that the CAG has an opportunity to provide views. This consultation paper came together fairly quickly, but what was very interesting from my perspective, not interesting because it's obviously going to happen, but in developing this paper, the IPSASB made sure they consulted with all their key partners and stakeholders, the CAG being one of those. We talked to you in December of 2021 at a very high level, and then had an in-period session either last week of February or the first week of March, where I know you didn't see the document at that point, but the advice you provided greatly reframed and reshaped the document to the version the IPSASB eventually approved in March. So thank you very much for that. If you'd like to see more detail on how your advice changed the document, you can look to the report back in Ross's Program and Technical Director's report. Coming out of the board's approval, what this consultation paper really focuses on, at least in my mind, are three aspects. The first is sustainability is required or sustainability reporting is required in the public sector, and the IPSASB should lead on that. The second is that should the IPSASB move forward with this, the IPSASB would focus on climate disclosures and general disclosures as the first topics it would address. And then finally, as you've heard, and we've heard from you today as well, we need to operate on an accelerated timeline. That doesn't mean sacrificing quality by any means, but we need to move forward and move forward in haste because this is guidance that's required immediately. This slide shows a post that Ian submitted on May 9th when we issued the document. It's interesting whenever Ian posts about sustainability, he gets mountain more views and likes than anything else the IPSASB posts. So there's significant interest in this topic. And you can kind of see that the IPSASB really started to talk about this topic in earnest probably just over a year ago, March 2021, when we started talking about our mid-period work program consultation. And throughout that period, so over a year now, we've seen more and more interest and more demand to move forward with this. The IPSASB has been having discussions, like I said, this kind of behind the scenes and behind closed doors. Where they really picked up was when the IPSASB was established in November of 2021. That gave the IPSASB an idea of what was going to happen on the private sector side and really a kick to get things going on the public sector side. The next point where there was a significant push in the IPSASB agenda was on January 31st of 2022. That's where the World Bank called out the IPSASB specifically and said that the IPSASB would be an excellent organization to lead a consultation to move this forward. And then 3 months later, or just over 3 months later after that, the consultation paper was issued. The one point I'll make about the IPSASB having significant discussions behind closed doors, looking back on that now, I know there was some criticism of that, but hearing the early discussions to where the IPSASB ended up, there was always a lot of support from day one that the IPSASB needs to be involved in this, but it wasn't until a few of those behind closed door sessions where the IPSASB really found out what that meant. So there was always a lot of, we need to be here, but they didn't know what that meant early on. By the end, they really came up with the consultation paper and knew where they stood. And I think those discussions need to happen behind closed doors so they could get on the same page and put this forward. So the first preliminary view that I wanted to get into really focuses on the IPSASB's view that sustainability reporting is necessary in the public sector. And there's two broad buckets that the IPSASB really focuses on, or drivers that drive this requirement. The first one is the public sector needs sustainability reporting, and that's the top box. And then the second box below focuses on the fact or the view that the public sector needs specific reporting, so different from that of the private sector. Quickly going through the three bullets in the first box, on the global public interest, as I talked about in reference to Ian's post, we see more and more demand, and there's so much interest globally from the public sector to start leaning into sustainability and, as a result, sustainability reporting. I think the private sector right now might be a little ahead of the public sector when it comes to sustainability initiatives and sustainability reporting. But in these global initiatives, the public sector is really necessary to move this forward. The public sector is really the leaders. They regulate, they tax, they subsidize. As Kevin mentioned earlier, they can provide tax incentives. And all those ways of operating with the private sector enable citizens to make decisions, enable private entities to make decisions that will kind of move the bar on sustainability more globally. The next two bullets, the economic, environment, social, and governance and capital markets, I'll touch on together. 40% of the bond market is dominated by public sector bonds. 20% of the workforce is approximately 20% is employed by the public sector, and about 40% of the world GDP is driven by the public sector. So as a result, where the public sector decides to raise money, how it decides to spend money, how it decides to treat its employees is going to have a result on sustainability going forward. As the private sector starts to demand more sustainability reporting from its entities, that will require the public sector to have better information in its bond offerings as well. So that's why the IPSASB believes that the public sector requires a sustainability reporting framework. Below, though, the second box is focusing on why does that need to be different than the private sector? And that's really for two big reasons. The first one is a different focus in the public sector. So in the private sector, it's assumed that there's going to be a focus on if a sustainability decision's taken or this sustainability initiative is moved forward with, what's the financial impact on the entity? Whereas in the public sector, you might need to go beyond that and consider the impact on society or the economy or the citizens. So if a decision is made to move to a green power generation, so away from coal to solar and wind, for example, you wouldn't just look at the impact on the entities that making that decision, but more globally, what's the carbon impact of that from a green initiative perspective. And then finally, the last bullet in this slide talks about challenges in applying private sector guidance in the public sector. And the IPSASB's conceptual framework outlines a number of reasons, but they include just the significance of non-exchange transactions in the public sector, the public sector's ability to regulate the longevity of the public sector, and then just the unique qualities of public sector assets that we just talked about in the measurement section, and about how they're often used for different uses than the private sector. So I will stop there and I'll go right into the first preliminary view. There's a need for global public sector specific sustainability reporting guidance. Do you agree? Thomas, back to you.
This is a pretty simple question. Any views? And be careful, as Dave said, if there are no flags up, it's support. So be careful. So Fabienne Firmenschor.
Microphone.
Thank you. Interesting explanation from you, Dave. Do you think are there any significantly besides your explain before that we can have any differences between private and public sector in a public sector sustainability report? So I would like to know if there are any standard setter who has released these standards before, and then in the future the report of this sustainability report should be bundling with financial statement or be separated. So our comment is maybe you should make a description the type of report. Is there any voluntary, mandatory, or by adoption? So who is a primary audience here? Just public or the whole stakeholders? Disclosure location.
Firmenschor, just one. Can we probably for the moment stick to the simple question, because it's all relevant questions.
Of course, I agree with this.
Yeah, because you're asking a lot of follow-up questions.
I want to explore in deeply. Thank you.
Yeah, no, that's great questions actually, and I think they need all to be answered. But at the moment, I think for the moment we stick to the question: do we need public sector specific sustainability reporting guidance? Yes or no? And I think you said you agree, right? Wonderful, lovely, Fabienne.
Thanks, Chair. Well, yes, obviously I agree. The only thing is maybe a reservation on the global part of the question, because it's resource consuming, and there's the issue of being able to deal with anything global. And the scope, I think, is very important. We talk about SDGs, we talk about ESG. Should we sort of categorize SDGs into ESGs? I don't know, just trying to have a map of those things and just maybe stick to that type of, well, to the SDGs or ESG, whichever side you take the issue from, but maybe not go any further than that at the moment. That's already a lot, I think.
It is already. Ross, I think you want to react to Fermin Jean's comment.
Yeah, I think maybe to both Fabienne and for Micha's comment. So I think the key to this consultation is it's a simple question or a series of questions about whether the IPSASB should take this on or not. Now, there's a high-level overview of how we might take it on and looking to international guidance, but the specifics and how that'll happen will be the next step if the board agrees to take it forward and allocate resources to it. So there is work to be done. So it's by design that all of that detail is not in this CP, and we're not going to get into that in our discussions. We're expecting we'll get a lot of information back from the consultations that we'll use in that next step, but the board has a key decision to take by the end of 2022 that's outlined, and we'll talk about it more in the chapter 4 of the CP, about whether it can satisfy the key enablers to actually do this work and do it right. So we need the support, people saying yes to this question and others, you should do it. And you're going to have the resources to be able to add this in addition to what's already on the work program. So getting into the details of how we might do it is a bit premature at this point, because the board could decide at the end of the year, no, we're not going to do it because everyone wants us to do it, but there's no additional resources to actually do the work.
Yeah, that's important, Ross. So Anwar and then Key. Anwar, you're on mute.
Yes, thank you, Thomas. The answer to the question is definitely yes. I'm just wondering if there has been any consultation in addition to the OECD with the Global Reporting Initiative as to their work, and also with the IFRS Foundation and the International IASB. And were there any pointers towards the IPSASB leading the consultation in the public sector indicated by these institutions?
Thanks, Anwar. And yes, we did have discussions with the Public Interest Committee, and the OECD is represented on the Public Interest Committee. And we also talked at the March meeting of OECD senior budget officials and the Green Budget Initiative about our approach in this space. And we have ongoing staff liaison discussions with the ISB and establishing those with the ISSB. And Ian was part of the technical working resource group that was put in place to develop the prototype guidance for the ISSB as an observer. So he's been having discussions as well. So a big part of getting to this consultation paper was the outreach to key stakeholders, and that will continue as we take it forward.
Thanks, Key, and then Catherine.
Thanks, Chair. Yes, I agree. However, the concept of sustainability in the global public sector specific sustainability reporting needs a clear definition. Does it mean a generalized sustainability, which involves a wide range of policies and statuses of public sector, or it only focus on financial sustainability? For the generalized sustainability, multidimensional information related to sustainability is needed, and the cost of gathering and providing all the information needed is big. Besides, evaluation of the generalized sustainability of a public sector needs professional knowledge of various fields and complex methods besides accounting and the financial system. This is different from the private sector, which mainly depends on the financial data. This will be a big challenge if it means financial sustainability. The boundary of the information is much clearer, and it will focus on financial information, which is within IPSAS regulations. Thanks.
Yeah, thanks, Key. We are not talking about financial sustainability only. We are talking about sustainability in a broader understanding, a broader sense. Catherine.
Thanks. Yes, I do support IPSASB doing something, and I agree that there's a need to start and get on with it in the context of how fast things are moving. Although I do ultimately think there'll be a slowdown at some point because everybody else is going to have to catch up, and I think there'll be a lot of catching up to do. Just to flag, the experience so far from my perspective in the UK, given I'm involved in transport quite a lot, for example, is that one of the issues has been actually outlining the boundaries between what government itself does in relation to sustainability and what it's directly shown, and policy issues about affecting what other people do, if I can put it like that. So building a road versus what you tell, excuse me, what you tell other people that they can drive in on it. And some of the boundaries around that are quite difficult and are much more public sector specific than you would get necessarily in private sector context.
Thanks for that, Catherine. Timothy and then Kevin.
Catherine has again said one of the points I was going to make. But anyway, I was first going to take a step back in terms of the definition of sustainability. So one of the issues of reading this document was there's a lot of talk about the sustainability goals. I think Fabienne talked about things like that, and really, this is not about there's sustainable development. This, I think, my sense is that we're talking about sustainability here rather than the whole gamut of development. Though obviously from the World Bank perspective, we want to see progress everywhere, but in terms of the SDGs. But I think there's an issue of focusing on the sustainability bit. But what is sustainability? She talked about financial sustainability, but there is this sustainability over perhaps what we're talking about, to narrow it down, is sort of physical resource use, which is environment, climate change plus, that kind of thing. And that's what we're talking about here, because I think it's quite important to say that, to be clear about what we're talking about in terms of sustainability, and that we don't get into broader things. And then my second point was a sort of less specific example, which was related to Catherine, was in terms of the way it's described here on page 6, it leads with government expenditure, but actually government regulation, fiscal policy is probably going to be more important to drive climate change than expenditure policy. So in terms of sustainability reporting, what actually, and I think the UK government has done this in terms of the impact of things it's done in terms of what has had an impact on climate expenditure versus regulation, and they basically said regulation has a far bigger impact on sustainability outcomes than actually spending money. And I think we need to bear this in mind, because we're in the space of public financial management. We tend to follow, our natural instinct is to follow the money and what it's being spent on. But actually, in this case, it's actually fiscal policy regulation are probably more important in terms of sustainability, the public sector impact on sustainability, than where the money is spent.
Thanks, Timothy, for this clarification. Kevin?
Yes, I think the answer for me is yes. I think we want, governments around the world, international organizations, we're setting these targets. I think we need IPSASB to lead. I don't think we want to be 5, 10, 15 years down the road and to look back and see that we were not supporting this incredibly important transition.
Thank you, Kevin. So in summary, I think I heard a lot of yes, but additional clarification is needed and additional thoughts. Thank you for that. I think that was helpful. Let's move on to the next PV then, Dave.
So the next preliminary view focuses on how the IPSASB views itself as the right fit to take this sustainability reporting guidance development forward. Maybe chiefly among this during the development of this document was just, we heard this over and over again from our stakeholders, specifically our closest stakeholders. In the consultation paper itself, we really focused on 5 main reasons. The first relates to the conceptual framework itself is broad enough and puts sustainability guidance within the IPSASB's wheelhouse and an area the IPSASB can work on. The conceptual framework is broader than just general purpose financial statements. It includes general purpose financial reports as well, which sustainability would fall in under. This is really evidenced by the second bullet, where the IPSASB probably about 10 years ago now developed the RPGs, and I won't get into it any more than what Ross spoke about earlier this morning, but they really do apply to sustainability reporting now, and the IPSASB's included a project there to illustrate how they apply, and they're not looking to change the guidance that's in there. The third bullet, we have a current project now beyond the project that Ross spoke of on the RPGs related to natural resources. We just issued a consultation paper. One of the first pages in this consultation paper outlines the scope of the project, and what it indicates is outside of the scope is the sustainability aspect related to natural resources. But this is a space where the IPSASB is growing and getting experience, and this again shows the IPSASB's ability to move into this space. The IPSASB also has significant experience in developing standards. We have 25 years behind us now, and not only does the IPSASB have the processes in place and the understanding of what it takes to set a standard and develop a standard, but also the relationships globally within the public sector to know who to talk to and understand the right people to get the information from and understand the challenges in the public sector. And then finally, and maybe most importantly, the IPSASB is able to move with urgency on this. They're set up and ready to go, and as soon as, assuming there's support to be had and resources are available, the IPSASB can start immediately and start to develop guidance, because all we hear is how important it is to have guidance out there so that entities can begin to apply it. So the second preliminary view is the IPSASB experiences, processes, and relationships, and enable it to develop global public sector specific sustainability reporting guidance. Do you agree?
Answers. Rosa, Karen, Fabienne.
I agree. However, needs resources, and that I think it's important, and sometimes different kind of resources. You need resources that also understand all the challenges that we have on sustainability reporting. And I think it's important also to look at all the initiatives, because there are plenty of initiatives around the world. Even for us, we are taking initiatives because we are obliged to advance. And I think that it's a lot of work to analyze different initiatives, what are the best or not, and to present that as a guide at the beginning as a guidance, not like a standard full guidance for everybody with sometimes some options. But I totally agree that you are the best place to advance.
Fabienne?
Yes, I agree, basically, but just flag out that the availability of resources is important and maybe out of the control of the IPSASB. So it's not only what the IPSASB can do, but it's also the current context. And to share my experience, when you try to get experts talking about sustainability, because they're already working on it for the private sector, is quite difficult because they are fully booked and you can't have access to them. So that's an issue.
Thanks, Fabienne. Karen?
I'm in the yes but camp as well, so I completely agree. It's the right start place. I think there are capacity issues to consider, and also capability in terms of potentially new skills to bring into IPSASB. I think the other question for me is about who are you going to be reaching out to in terms of the guidance, and is it a different community to the one that currently exists? And that probably goes back to the scope question. If we're just purely talking about finance people, then there are well-established relationships there. If we're going into broader impact stuff that might involve other parts of the public sector, then those relationships might not exist.
I don't necessarily think that doesn't mean that IPSASB are the right place to start, but I think we should recognise that it might need to be broadened out. And certainly in the UK, all of the sustainability stuff is just so fragmented across government, with different parts of government involved in this. There may be something to consider around that.
Thanks, Karen. Agnieszka, then Paul.
Okay, I'll try to be brief. Yes, Camp. Of course. Also, you're fit for that activity. There's nobody else. That's an additional issue for that, and I'm not sure whether that's the right moment to ask how, but it's connected with the conceptual framework addressing and financial general purpose financial reports or non-financial information. If you could clarify on that, is it really non-financial information being covered by conceptual framework? And on question how, do you consider that should be like two sets of authoritative standards issued by one board with the help of advisory group, or that's not necessarily? That was my impression, but maybe I got something wrong. Maybe that needs clarification as well, so that it's, obvious.
So Ross, directly responding.
Yeah, I think it's all good questions and things to note, but I think it's premature. The board needs to think that through. So we've had initial considerations and thinking that's gone into it, but when the funding comes through and we get the remit to take it forward, there'll be a need to provide feedback on what that plan looks like and kind of finalize it. And that will be driven by resource availability and how quick we can move and how we do it. And I think there are fundamental issues about the status of guidance, what we'd call it, things like that just haven't been thought through. Again, there's a need to balance speed with getting moving on this. So that means some of the conversations still need to be had. But we didn't think that should stop us from asking the questions on whether we should do this or not and start seeking the resources we actually need to do the work. So again, I'm kind of a broken record on this, but if we don't have people step up with resources, it won't be us doing it because we can't. We just don't have the resources to do it. So we're going to need funding.
Okay, I understand that. And on conceptual framework remit?
The same.
Paul, then Catherine. Paul, you're on mute.
Sorry, failure to talk between device and computer. I absolutely agree. Same as Agnieszka, I don't really see that there's an alternative organisation that has standard setting experience and such a wide variety of contacts with different stakeholders globally. And I think a lot of this really depends on how the IPSASB is going to scope its work, because we have more private sector sustainability standards at an entity level than you can shake a stick at. It's been one of the problems, and it's getting better, but there are still competing standards, and the European Commission is working on something similar in respects to GRI, but different. So at an operational level, I think there's a lot to go on. What I'm certainly not aware of is the kind of whole of government strategic level. And this, I think, will be the really difficult thing, actually getting governments to agree to a commonality in reporting of things like tax policy, regulation approach, because this impacts directly on their sovereign powers, and it may disclose information that they don't particularly want to disclose. So yes, I agree, and I think the development of these relationships, looking at what some countries are already doing in respect to the whole of government reporting of the actual overlying policies, is really the way to go. Thank you.
Thanks, Paul. Catherine, then Franz.
Well, I do agree as well, and not that much to add to what's been going before. I absolutely take the point about having to develop capacity to deal with this. But I think it's going to be important from an external perspective to think about, there's a reason why the IFRS Foundation has set up a separate board. And I think there's the the question that you'll be asked and that needs to be answered, and you may say that it's fine because I may not know enough about it, is whether the board as it's currently constituted has the ability and capacity to deal with what's going to look like quite a different thing compared to what they've been doing up till now, potentially. And I just think that probably needs to be kept under review as well. But I absolutely agree that it's the IPSASB itself that should get started on this. And its links with other bodies, not least the IPSASB, are going to be very important to get benefit from that.
Thanks, Catherine. Franz, and then Anwar.
I agree with Catherine that there is a very good reason why the IFRS Foundation set up a separate board, the IPSASB, separate from the ISB, because this is going to be a big thing. It's going to be very time consuming. It's going to need very specific expertise. And I think that the setup that is currently considered with the sustainability reference group is a great idea, but I think the paper should more clearly state that it is supposed to be a temporary thing to get things going quickly, using the expertise of the IPSAS board in standard setting, but ultimately aiming for a separate sustainability and international public sector sustainability standards board for the public sector, just like it is for the private sector, a separate board.
Thanks, Franz. Anwar?
Once again, my response is definitely yes. The IPSASB's experience, process, relationships does enable it to develop the global public sector specific sustainability reporting guidance. As regards capacity and resource constraints, I think they may be addressed as well. If we refer to what Ross said earlier and Catherine immediately, pre-penultimate speaker, there may be situations where the IPSASB board may not have the expertise, but if financial resources are available, they can always be leveraged in. So in terms of environmental issues, climate changes, carbon emissions, and the like. Surely in that case, IPSASB does need to leverage in expertise up from outside. But by the same token, IPSASB, I personally feel, should lead the way and eventually develop the sustainability reporting standard for the public sector in the long term. Thank you.
Thanks, Anwar. Timothy, are you in?
I say it was just a quick, as we the answer is yes, because we're one of the proponents that felt that you should be doing this. But I mean, just to one of the things is to say, from our side is to offer support in this process. And I think we've got a group of people that are talking about this and lots of capacity that is there that we can sort of offer to work with you. I know that a colleague of mine was sending an email of what's happening in Latin America and the Caribbean, and there's the group of government accountants organization that are already working on this, and I think EY may be supporting them as well. And there are various things that are already going on. So what I would emphasize is that how we can crowd in the capacity that's already working in, rather than try and you go it alone and try and sort of as a sort of 2 or 3 people try and develop a standard, rather than bring together, crowd in this collective thinking that's going on already. Because also with that collaboration and that coalition, it's more likely that these things will be implemented as well.
Thanks, Timothy. So in a summary, the answer is, in the absence of anybody else, yes, you should do it. Probably at least you should start doing it, and then we will see later. Okay, with that, I suggest that we have, Ian, I don't suggest.
Yeah, I mean, I think actually, Timothy, really, I just wanted to pick up from where Timothy's last comment, because I think, in the board, did have quite a lot of discussions about how we couched the preliminary views, and I think, we in giving that preliminary review, we were very cognizant of the factors that people have raised in terms of resources in their broadest sense, in terms of obviously dollars, but resources and needing to get as many different views in as possible, and not to reinvent the wheel unnecessarily. And I think it's that sense, in terms of the response then to that. Well, the IFRS Foundation has set up 2 boards. Why do you think you can do it with 1 board? I think the point is, at the moment, we don't have an answer to do you eventually need 2 boards or not, because it very much depends on the extent to which you can leverage in, the extent to which you can build off the various different sources of guidance that are already there to create something that works for the public sector. And I think, it's that sense of we need to get started. We need to start to address some of the issues that Agnieszka was picking up very properly. And then once you've actually begun to get your arms around this in terms of what it is, what are the needs, to what extent are they different, to what extent can you use existing guidance, whether it's GRI, whether it's European, whether it, and so we shouldn't take a decision on the, you definitely need 2 boards at this stage. And that's really the answer to that. And we will need to assess as we get into this, what the priorities are, how quickly we need to move, where the areas of focus are, to what extent you can draw on others, and so on, and then make decisions. And we have said that in the CP. It doesn't preclude setting up a separate board, but that would take a long time. And actually, you really need to get into this to understand what the needs are at the moment. So that's really it's a pragmatic approach, if you like.
Thanks, Ian, for that summary. So with that, I suggest to have a break now, and I suggest to have, in 4 seconds, a 13-minute break. So please reconvene 12:10 in time. David will ring the bell, 10 past. Please reconvene 10 past. Thank you. So welcome back, everybody. Welcome back also for the French people. Alors, comment c'est? Very good. So Dave, can you lead us into the next PV? Thank you.
So we have 4 or 5 more questions to go through, so I will speak less and let you speak more, or speak, maybe not speak more. But as we move into the next item, this is our first specific matter for comment. And what we're really touching on here is the IPSASB has prioritized 2 topics, climate disclosure and the general disclosure principles. And because the IPSASB is hoping to move with haste, within a short time period, it may have availability to start new projects. So it's asking constituents, what should it prioritize next? During its discussions with key stakeholders, the IPSASB identified these 5 areas. SDGs, I won't get into anymore because the CAG's already brought them up. Interface with the Natural Resources Project. I've discussed that a little, where we currently have a natural resource project where we've scoped out sustainability disclosures. Should we look into that more? Complete sector versus entity specific. I've touched on this a little, but this really focuses on the impact of sustainability decisions or initiatives, whether it's specific to the entity or whether those decisions should be considered from the perspective of, or a wider perspective, whether it's an entity, a society, or the economy. Materiality is a similar concept to the previous point I just covered. Right now, we have a well-established materiality principle for financial reporting. How does that hold up from a sustainability perspective? There's been some talk about double materiality, considering materiality from the entity's perspective, and then also considering materiality from, like I said in the previous bullet, more broadly, impact on other entities, impact on the society. And then the last point that was outlined in the consultation paper is it relates to the IPSASB's established strategy to align with the international statistical standards when appropriate. And this might be an area where we can consider going forward. And is this something the IPSASB should prioritize? So the question is, if the IPSASB were to develop sustainability reporting guidance, what topics are the most pressing?
Thank you, Dave. Fabienne?
Just an emphasis, really, I guess, going back to what Timothy said earlier, defining sustainability and the scope of the of what it should apply to, I think would be the first priority.
Thanks, Fabienne. Paul?
I think I'm unmuted, yes. Again, I think it comes back, and I wonder whether this is what's meant by complete sector versus entity, as to whether the IPSASB is going to take a top-down role, i.e. looking at whole of government, or a bottom-up, so looking at the entity level, specific disclosures for their operations and such like. And I think probably certainly from my point of view, the biggest impact of the public sector is at the whole of government level over exercise of things like tax policy, regulation, and basically changing behaviour of the private sector and of its citizens. In respect to the SDGs, again, we think this feeds more into the whole of government aspect. It would be nonsensical for most small public sector entities at a local level to be considering the SDGs, but it's obviously something that a government should consider as part of its overall sustainability plan. We also think differential reporting could be quite a big issue. I mean, there's the new European draft directive on this will extend sustainability reporting to smaller entities in the private sector, and they're ill-equipped to deal with this. And I think this will be at least the same case in the private sector. So the European Financial Reporting Advisory Group is going to work on some smaller entity based exposure draft, possibly later this year, but probably not. So this might be an area that has a great deal of public sector interest. And so I think I've already mentioned the tax policy side of things. You know, there's much scientific study out there that indicates that tax policy can really change behavioural aspects. And so if you want to incentivize green behaviour, tax policy and obviously other public incentives can do that as well. And likewise, things like disclosure of, for instance, subsidies given to green energy versus carbon emitting energy. You know, this could be very important across the whole of government level. Thank you.
Thanks, Paul. A couple of good ideas. Any further points? No. Dave, I think with that we can continue.
Thank you. So the next two slides and the next two PVs go into the IPSASB's proposal on how it would develop guidance. I won't spend a lot of time on this slide because I think the diagram is pretty self-explanatory, but what the IPSASB was dealing with when it developed this diagram was balancing the push from stakeholders to develop guidance on an accelerated pace versus maintaining quality and developing guidance that really relates to public sector specific issues. So on the far left of this diagram, one option would be for the IPSASB to just take whatever is issued by the private sector and just bring that over. That would be a very timely answer, but it's unlikely that public sector issues would be addressed. Versus the other side, the right-hand side, the IPSASB could develop all guidance in as greenfield standards, develop everything from scratch. In this case, all public sector issues would be addressed, but based on my history, when you do anything greenfield, it takes a long time to do. So as a result, doesn't tick the timely bucket. So what the IPSASB is proposing is somewhere in the middle and on a topic by topic or project by project basis, analyzing and assessing whether any established private sector guidance can be applied in the public sector. And if it is applicable, if there are limited differences, align as appropriate and make changes where necessary, where there is no private sector guidance or it's not applicable. The IPSASB on the far right of this diagram and have to develop guidance in a greenfield basis. The second slide I wanted to cover before I get to the PVs relates to the type of guidance the IPSASB is proposing to develop and what it would look like. And from my perspective, at least, this slide, I really look at it in two ways. On the left-hand side, it outlines the type of guidance that would be developed. And then the right-hand side, those gray boxes, it outlines what information would be provided by the guidance that's developed. So if I start on the right-hand side, any guidance that's developed by the IPSASB would allow a reporting entity to disclose the governance strategy, risk management, and targets and outcomes related to any sustainability initiatives that are undertaken by the entity. This is consistent with the Task Force for Climate-Related Financial Disclosures, what they've come up with and what they've proposed. On the left-hand side, this is really where the IPSASB puts some thinking in, although not completely finalized, but the type of guidance that the IPSASB believes it'll have to develop. Starting at the top, the general sustainability disclosure guidance, the IPSASB believes is going to need a framework or an overall set of concepts that outline the type of disclosures that are going to be necessary as it relates to sustainability in general. Below that, the blue and green boxes, these will be more specific to topics. The light blue box will focus on topics that where sustainability decisions are made and the financial impact of those decisions on the entity, where the green box will focus on those same sustainability initiatives, but how they impact a broader user base. And then finally, at the very bottom, function-specific metrics relate to how the entity will assess its progress towards its sustainability initiative goals and targets. So all of this will kind of fit together so that there's a framework established for entities to apply in reporting their sustainability initiatives. what I thought I would do is, because both of the next two preliminary views focus on whether you agree with the IPSASB proposal on how to take forward the work, I'll take them together. So the first preliminary view is, if the IPSASB were to develop sustainability reporting guidance, it would apply the framework on the previous slide. The IPSASB would work in collaboration with other international bodies through the application of its current processes. Do you agree? And then the second preliminary view goes back to the, I'll call it the arrows slide, and talks about, if the IPSASB were to develop sustainability reporting guidance, it proposes to address the general requirements for sustainability related information and climate related disclosures as its first topics. Do you agree? Thomas, over to you.
Okay, colleagues, any reactions? Jeffrey, then Paul.
Thank you. Yeah, well, I fully agree with the principle to make the most of what is already there. I just have I don't know whether it's me, but this block 1 and block 2, from what I understand from the block 1, that's more the impact of the environment on the organization. So I think when we had our previous meeting, we were talking about that. So for example, if you've got a warehouse that's in a low-lying area and it gets flooded, then should be making provision against that. And I think that would go against what most people think about sort of sustainability reporting, which is actually what you're doing for the environment, not what the environment is doing against you. So I would just, that would be my my note of caution on that. And just in terms of the previous question, actually, because I was too late to comment, I think you have to be a bit careful about the SDGs, because as a whole, because they're extremely wide ranging, and a lot of the stuff is not really about sustainability, it's about the development. So I think, you know, it's best not to treat them as a block, but sort of focus on one or two of them. Thank you. If you want to prioritize.
Thanks, Jeffrey. Ross, do you want to comment on this understanding of block 1, block 2? I'm not so sure.
Thanks for the comments. Maybe I'll start actually with the general comment on the SDGs. We have heard a little bit of initial feedback that we'll need to think that through a little bit more, and as you say, prioritize specific goals. So that is one of the pieces of feedback we are hearing. On the block 1 and block 2, I think it's more related to the stakeholders themselves. So in block 1, it's more related to, if you're looking at it from the IPSASB's perspective, they're clear that it's about enterprise value and their sustainability programs and how that impacts enterprise value. And that's the block 1 focus. I think we'll be more in the block 2 space, where we have to take a broader stakeholder approach, and it might relate to the impact on the enterprise, but it also might relate to the broader impacts. And again, that comes down to the dual role in the public sector, where it has the power to regulate, set policy, but it is also still an emitter, and it still should talk about its impact on the environment at the reporting entity. So it's pretty complex in the public sector, that's clear. And I think we've got to come to ground once we get more clarity on where the IPSASB standards are going to land, as to what extent we can utilize those in the public sector. And then there'll probably be another question, and what else do we need in the public sector in addition to what they provide?
Thanks, Ross. Paul, then Timothy.
Thank you, Chair. Again, I kind of echo Jeffrey on this. So I fully understand why the IPSASB would be, closely working with the IPSASB. But on a general level, I absolutely agree that you should work with the existing standards that are out there, that you should work with the existing standard setters that are out there, and not try and reinvent the wheel. We just don't have enough time for that. We also agree with developing the general guidance and the climate and greenhouse gas related disclosures first. The main issue we have with the IPSASB's draft standards is, again, as Jeffrey was mentioning, this focus on value creation. We've heard the IPSASB claim or say that over time, value creation will effectively produce double materiality. So it will not only deal with the impact of climate on the enterprise, but also the enterprise's impact on the climate. Because if you want to generate long-term value for your business, then you will have to take these things into account. We struggle with that. We haven't come to a definitive view on this, but certainly much of the discussion we've had internally does not accept this view. I mean, we've seen many, many examples of entities that have taken no account of sustainability issues in their long-term value creation. And I think this may be a case of wishful thinking. So for us, the biggest single issue that's been kind of discussed with the IPSASB's drafts at the moment is the lack of this double materiality. But we see them as a useful starting point, but we may well actually say in our consultation response to the IPSASB that we think you should consider double materiality in your own standards. Thank you.
Thanks, Paul. Timothy?
Thanks. So I had sort of, a number of comments. I think first, the assumption that that there isn't, that there are just things going on in the private sector. I think there's a lot going on in the public sector that we don't necessarily know about, and although they may not be in the form of standards yet, there's a lot of thinking going on, and so I think that's important. And then also back to the very point at the very beginning in the first agenda item is about there are existing standards in that IPSASB has set, which are relevant to being used to develop these standards for the sake of sustainability. But I think what this document and would benefit from, and perhaps it's going back to the last question, is this tight definition of what we're talking about in terms of sustainability. And it does get confusing when there's a whole world of financial sustainability, fiscal sustainability, and then there's are we just talking about environmental sustainability, or are we talking about something more? Because then you can go on to the sustainable development, which is broader. But perhaps for now, one of the useful things would be actually to define sustainability, saying there's already something on fiscal sustainability here. What we're talking about here is environmental and sustainability and climate change, and that's what we're going to limit to ourselves now. Otherwise, you'll just get drawn into it. And I think that would frame this a lot more clearly, because I think we may go around in circles a little bit about what we're talking about. But then again, my fear is a little bit also in terms of when we're going now to the second bucket of the sort of public sector specifics and what we're talking about here is a little bit going to this sort of outcome level is the problem that we talked about earlier, which is how do you measure outputs and outcomes in this space, and can you do so in a standard way? Because what a climate response is and a legitimate one in Uganda is very different from Fiji, is very different from Brazil, it's very different from France, and so this is something that one has to sort of deal with. And then if one is trying to come up with standards, what the standard one wants to apply to France is going to be very different in terms of climate action and green credentials is going to be very different to Uganda. So there are lots of things in that which we need to think through, because I don't have a simple answer in my head, but it's very important to understand the different contexts within which what one is setting standards for in this space.
Yeah.
Thanks, Timothy. Anmar?
Thanks, Chair. I surely agree with the proposition, full proponent of the suggestion. I've got one major observation on the EC though. Can we just leave it at, if the IPSASB were to develop sustainability reporting guidance, he proposed to address general requirements for sustainability information, rather than tagging on climate-related disclosures as its first topic, may we not keep the two bifurcated, segregated from each other, so that we deal the general perspectives first, and then we may move on to climate-related disclosures as the next approach, or the next CP at a later stage.
Dave, any comment? Oh, Ian.
I mean, the reason for picking up climate related is pragmatic, because if you make the assumption that, by the end of this year or shortly afterwards, IPSASB will have issued its first two standards, one on the framework and one on climate related. The moment it does that, the question will be, how does this apply to the public sector? And also, for the reasons that we've been talking about, I don't think anybody could deny that climate isn't urgent, and that the public sector will not impact on that. So I think, that's really the reason why, and the board proposed that. I mean, I think the point that's been raised, which I think we would genuinely value information on, is this point about how do you define sustainability reporting, because there is no definition at the moment. And to the point that Timothy raised, I mean, we did have this debate quite intensely at the time that we did recommended practice guideline 1. And we were criticised quite heavily for just focusing on financial sustainability at that point in time. But even in doing that, we had to create a definition of financial sustainability, because there were sort of several different options out there. So, this is not going to be easy, but I agree with the comments that have been made that we're going to have to put some sort of frame around this. But I think genuinely, if people have ideas about how we do that, I think that would be very helpful, because part of the reason why we sort of went to sustainable development goals is because of government's impact in that area, and the fact that you do have a definition of sustainable development. But we're going to need to start somewhere. So I think, genuinely, it's an open question. If anybody can come up with something that's going to work or is likely to work, that would be very welcome, because the point is, it's a very good point that has been made by the CAG.
Thanks, Ian. But I think in summary, I don't hear any opposition regarding using the framework as proposed. I don't hear any opposition, obviously, regarding collaboration with other international bodies. And I think you just explained the rationale, Ian, why starting with the general requirements for sustainability-related information and climate-related disclosures. I think that leads us back to the arrow slide, where we want to be more on the right side of the arrow, make use of what is already existing or developed by others. If I think this will already be time consuming, if I kind of listen to the rumors of the proposed size of the staff of the IPSASB, then I think that will already be time consuming to follow up with all the outputs provided by the IPSASB in terms of how you can kind of keep pace with that. So last comment, Kevin, and then I would suggest to move us on to kind of address the last two questions. Oh, Rosa, you were still on. No, let's do Kevin first, and then Rosa, please.
So thank you, Chair. I think there's a lot of logic to, looking at general requirements for information before we move to something that feels more specific with respect to, something like standards. I've definitely, from a project management perspective, would be more comfortable with an approach that highlights something more definitive. And I think climate is enormous by itself, but if even in the context of other sustainability goals, I just think I think the organization would be overwhelmed if we took on something more than climate. You could have a vision saying that we're going to broaden this out to the SDGs, I think there's 17 different goals, but I think climate is one of them. And I think just really focusing on climate from a project management perspective would just make sense to me.
Thanks, Kevin. Rosa?
I will be very brief. I agree with the proposal to not to reinvent the wheel and to use what exists. And I think this proposal that is on the screen, climate, it's now the first priority. Others will come, and we have already on the table biodiversity. It's another topic that now is in the importance is increasing. But I think you need to start for something, and I agree. And I have also. I share the point of Jeffrey about the Sustainable Development Goals. I think we need to be very prudent how we are incorporating them. I totally agree.
Thanks, Rosa. So Dave, lead us into the next point.
So the last two, I think it's preliminary view and SMC I wanted to go through relate to what we call the key enablers. I also think of these as challenges that the IPSASB will have to overcome in order to deliver on this ambitious plan. I only really want to touch on the first two, and I think Fabienne and Rosa might have touched on them earlier as well. And I know Ross touches on the first one all the time. The first is appropriate resourcing, and the IPSASB has a full financial reporting work program right now. In order to take on sustainability reporting, we need to increase resourcing. We need more staffing. We'll need more funding for resourcing because our current funders fund our financial reporting work program and they don't fund sustainability. So we'll need to look for other sources there. Another point that's been raised already today is ensuring that the IPSASB has the appropriate support to develop this kind of guidance. IPSASB are experts in the public sector, they're experts in financial reporting, but they'll need help on the sustainability front, and that's why the IPSASB suggested supporting themselves with a sustainability reference group. In this regard, they would help advise the IPSASB in developing this guidance as the IPSASB kind of supplements its current board members with board members that have a sustainability background in the future. I won't touch on the other points in the interest of time, but I think they speak for themselves. As I go through the last 2 points, again, I'll do these together. The preliminary view is the key enablers are needed for the IPSASB to take forward the development of sustainability reporting guidance. Do you agree with the IPSASB's preliminary view? And then with regards to these key enablers, and Timothy's already generously supported or indicated that there's World Bank support at the staff level that have expertise in this, but do CAG members have other leads for the IPSASB to follow up on where you could support with these key enablers, or where should we look? So I think these go together, so I will take them together. Thomas, back to you.
Yeah, comments. Fabienne, you don't need to put up your flag.
Thanks. I talk maybe more about the financing side of it. I would think that coordination at the level of international organizations, especially those that compose the PIC, would be well placed. And I would be more concerned about individual jurisdiction initiatives, because it has to be broad support from a large number of governments and jurisdictions. So yeah, definitely see how international organizations may be able to help in that. I know it's not going to be easy, but still.
Thanks, Fabienne. Further comments, Agnieszka?
Just one practical idea that just came to my mind. You're referring to resources that are actually offered to IPSASB, and we also know that they also are one of the stakeholders. So my idea was maybe it would be feasible to get some kind of liaison officers for the public sector within the IPSASB, so that they commit their time on potential public sector specific issues in the standards, because they are aware that you'll be using probably their standards. So maybe that would be at least small part. I know it's not much, of help, but still having someone dealing with public sector issues inside, not just relying on you analyzing and giving input, maybe that would be something feasible.
Yeah, yeah. I mean, I think the IFRS Foundation have been very supportive of, IPSASB entering the space, and that was part of the reason for allowing me to observe, the technical readiness working group discussions. I think if we do take this on, I think there is an openness to a more structural involvement in the work of IPSASB. So, in a sense, I think once the decision is made, if we make a decision to move forward, then I think a more structural approach than we have had hitherto, would absolutely be on the table. I think it's also, just to say, we've also had some very constructive early discussions with GRI as well, and they've indicated their support as well. So I think, really, again, it comes back to the decision as to whether we're going to enter the space or not. And if we enter the space, then I think those linkages, there's, absolutely a welcome. And I think, the key thing would be that, because this is moving so fast, actually having those would be really important, so that the public sector perspective is at least considered. I mean, IPSASB is focusing on capital markets participants, but the ideal would be that when there is a choice, if they have one which facilitates interoperability, or whatever you call it, with the public sector, that should be taken. So I think there's I think there's a willingness to do that. And again, at the moment, though, it wouldn't be appropriate because we haven't made the decision that we're moving forward, but I think that would be forthcoming.
Thanks, Ian. Timothy?
So I think I've already answered yes to this this question, at least in kind. So, but one of the thoughts that came to my mind, so we all need to work together on that, is there's a sort of an emerging group called the Coalition of Finance Ministers for Climate Action that has been going for the last few years and is increasing momentum, and that may be a forum with which one can share. The IMF and the World Bank form a secretariat, and I think they're 60-70 members by now. I'm not sure what the number is, but we have sort of one of what are called the Helsinki principles is around mainstreaming climate at a PFM, and this sustainability reporting is part of that agenda. And so, what one thing is maybe we could arrange sort of events or something like that around principle 4, around getting sort of sets of representatives from there, and this gets over this issue of, rather than bilaterals, that will be a way of individual countries having an input into this process as well. So that's just a thought that came to my mind.
Ian?
Yeah, no, I think, and actually just to say that through your colleagues, Timothy, actually, I was able to actually address that group earlier on in the year. So I think, and I agree, I think that it was a very good discussion. So I think it's exactly opportunities like that we're looking for, to engage in the dialogue and so on. So thanks. And we'll definitely follow that up.
Rosa.
Inside the European Commission, we are trying to bring this capacity also and have new skills on these areas. And we are working together with member states because we want to report a lot on this issue, and the information is coming from the 27 member states. And I think we are open to discuss with you on what we are working, how we approach. I think I offer this possibility to have a constructive dialogue with the team.
Thank you, Rosa, for that. Timothy, are you still on? Okay. No further comments? Right, so I think in the summary, I think we heard the message. There is definitely a need for public sector specific guidance. I think the group felt that the IPSASB is the right body to do it, and or at least to start developing the guidance, as much as I understood from the reactions, but kind of still the warning that it's probably not possible on the basis of the current resources. I think that is pretty clear. I think it was the shared opinion that the board should make use of what is already existing and seek the close cooperation with other initiatives, as you're already doing, in order to build on the existing resources. And last but not least, to focus on general aspects and the climate-related aspects. I think we heard support for that as well, and for the framework which you kind of developed and proposed. So I heard that as well. So I think that should give you at least some direction for the way forward, or some confirmation, I would say, rather, looking at the PVs and the SMCs. So thank you, everybody, for the contributions. I think that brings us to the close of the official agenda. As always, it was a very fruitful and lively discussion. In between of the meeting, I was concerned that we will stay until the afternoon, but we managed to close it in the official time of the agenda. So with that, I'm bringing it to a close, and I think we can stop the streaming. Please, the CAG members on